All right, everyone, so we're going to go ahead and get started here. Chapter 8, Setup 8 on dip buys. Now, this is not the first time I've taught this chapter. I taught this last year during our summer school program, and it was at that time the first time I had taught it. Dip trading is a newer strategy for me, and it's one that has been, in a lot of ways, a game changer for my trading. But it's also one that I was trading for almost 10 years before I started doing dip trades, which is kind of crazy. But it's not very intuitive when you should buy a dip and when it's not a stock that's just selling off and tanking. So it is more complicated. Within the range of dip trades, there are going to be some that are easier than others. I'll show you, of course, a bunch of examples. I'll show you some examples even of today on VCNX, which I'm up 84,000 or 85,000 on, and dip trades definitely were a part of my trading on that stock today. So why don't we get in here, and I'll just show you. I think I already kind of talk about some of this stuff in here. Let me move my video to the top corner. So my first dip trades were during the 35% market crash in March of 2020. The first that I would really recognize as part of this new strategy. When I started buying, it was when I started buying stocks that were actually about to be halted going down, or just after several halts going down, and then if they showed strength, noticing some huge whips that create almost instant winners, I began buying the dip, and then all of a sudden, rip back up. So we had these instances where, and one of the examples I'll show you is on Norwegian Cruise Line Holdings, which is one of the ones that I kind of recognize as being one of the first ones where I did it with some share size, and was like, whoa, this is amazing. And what had happened, of course, with COVID-19 was that the airline stocks were down and cruise line stocks were tanking. Cruise line stocks were getting destroyed, down 50, 60, 70%. And we had a day where Norwegian Cruise Line Holdings had halted a couple times going down, and I just started looking at it, and I was just, I'd already done a few of these dip trades, and I was like, this is going to bounce. And when it bounces, it's going to be a good bounce. When something drops from, I don't know, well, this is a pen, I don't know how much it's going to bounce, but, if you have a ball and you drop it from, a foot off the ground. Oh, well, we've got a gummy bear here. So let's see what this does for us. All right, so let's get this on split screen. All right, so we got a gummy bear. So if I drop this gummy bear from, I don't know, 6 inches off the table here, it doesn't really bounce. Now I drop it from way up here, that bounces just a little bit. You get a little more bounce to it. Of course, this has got some spring to it as well. So the higher it falls, the more it falls, the bigger the bounce. At least that's the idea. And so on Norwegian Cruise Line Holdings, we had several halts in a row going down. And so that's when I started to think, okay, when this reverses, it's going to bounce. It's going to bounce quick. It's not actually all that different from when we see stocks that halt multiple times going up. And then, when they reverse, they drop hard. So the other expression or analogy I've used is kind of like a rubber band, getting super stretched out. Of course, some stocks can stretch out much more than you would expect. So you don't want to short it too soon or buy it too soon because it can get more extended. So this setup is similar to a bottom bounce reversal setup in some cases. But it can also be applied while a stock is still generally trending up, but just has a quick flush and then rips right back up, which is a little different than a typical reversal off the low. So we have a separate chapter dedicated to trading reversals, which is shorting strong stocks and buying really weak stocks. And although that was the origins of the dip trade, I recognized that I could actually start buying dips on strong stocks because we know, we look at a strong stock. I don't need to draw it for you. I was going to draw it, but I'll just show you. We know when we have a strong stock like VCNX that while over the course of this, 30-minute squeeze in momentum, well, it started pre-market but continued, here as the bell rang, the stock generally was moving up. But it doesn't mean that there weren't moments where it dipped down. And so moments, like down here, the bottom of these candle wicks presented dip opportunities. Right? These can all present dip opportunities and then sell as it comes back up. But, how do you know what's a dip and what's the end of sort of the move going up? And that's what we're going to be kind of showing. I'm going to be showing you and talking about. So, so it is similar to a bottom bounce at times, although and we will trade that, although I wouldn't really even necessarily call that a dip because that is, at that point, a real bottom bounce. But a panic sell-off, dip buy, can occur when a stock is extremely strong but just has a momentary panic, and it just drops and then pops right back up. And that's something that even today, I was up a little over 100,000 and had one of those panic sell-offs, and I sold into it. Why did I bail out? Why did I sell? Well, I was in the stock at $9.20. It drops to $9, drops to $8.75, then to $8.50, $8.28, and it's just really tanking. And my fear was, what if a headline just got posted that they've just done a secondary offering at $5? And I had 20,000 shares. So I was like, I have to bail. Because if this halt's going down, it's probably going to open lower. So I panic, and I did the panic sell, which I hate to do, but it was the right move because of the true risk of it could have been news. Now, it turned out not to be news, but I didn't have time to check. I was seeing the halt level approaching, and I was like, I better get out now while I can. And then it did bounce back up. Not a lot, but it did a little bit. So those types of panic sell-offs, they can occur when a stock is really strong. It just kind of like, shakes the fence a little bit or shakes the tree, and all of a sudden some loose hands, paper-handed traders, panic, it drops, and then the stronger traders come in and buy those dips, and it rips back up. So it is a complex setup. It's probably one of the last ones that you'll master as a momentum trader, although I could be wrong. Some of you may end up really relating, and this just is perfect for you, and you adopt it sooner. Because on the one hand, while it is harder because it's not as intuitive, on the other hand, when you buy near the lows, inherently your stop is closer because you're getting in your support, and some of them can be terrific entries that turn into great trades. So it may be something that you do end up deciding to put a little more emphasis into learning. But that's absolutely right, Josh. So there's this expression of catching a falling knife. As a knife is falling, you try to catch it, you can get hurt. And so how do you know when you're pressing the buy button that it's not going to drop another $2 a share or go ahead and get halted going down? And I've had both happen. I've had times where I tried to do a dip trade and it halted going down, and now I'm long into a halt going down, which is exactly the wrong thing that you want to have happen. So so even with my experience, I still make that mistake sometimes. But this is what we're going to talk about in this chapter. So let me read this for you. So wild dip entries have been a great addition to my strategy. When timed wrong, all right, they can also produce really big losses as I'm buying right into a stock that's selling off. So the ultimate question here is how to determine when to buy and when to wait for it to keep dropping. Because, of course, when they drop fast like this, by the time you have confirmation, you could be getting in way too high off the low. And then you're like, well, is it bouncing or is it just going to bear flag for the next move down? But if you start buying here, well, if it does end up bouncing there, you're perfectly timed. But if it goes lower, then what do? Do you add more and add more and add more? Or, it's just kind of that question of at what point do you say, all right, I'm in too soon. So timing that entry is important. So this is a difficult setup for me to really clearly articulate. And I think that part of it is because it requires a certain degree of intuition. Therefore, it should be considered one of the most advanced entries, likely not suitable for beginner traders, although you're welcome to try your hand at it. But I wouldn't be super surprised if you find yourself getting a little confused or frustrated, because the entry is there's not an apex. It's not like taking a long over a pivot. So one of the trades that I took this morning on VCNX, which was actually a really nice one, was pre-market. Let's see, where was this? So it was actually right in here. So pre-market, we had, I took this trade right here. So the apex, high of day was 595, right? So we had this high here, we had this high here. It dipped down, and then I got in, and the break of 595 gave us an immediate break over the whole dollar of 6 and a squeeze up to 615, which, was not a huge winner, but it was okay. Now, that was an apex point. That's a very logical setup, especially when you look at the 5-minute chart and realize that the first 5-minute candle to make a new high also was right here at 95. So it was a 5-minute, it was a 1-minute, and then we got a similar setup here. So these setups, which we've talked about certainly through the Gap and Go chapter and already in the Momentum chapter, first candle to make a new high, break through the high, maybe a small ABCD pattern. These are setups that have very clear apex points dialed into the penny. Dip trades aren't like that. However, I did a dip trade on VCNX right here pre-market where it actually dipped down right down here, and I decided to buy it. So, I'll talk about that maybe a little bit more and with some of the other examples, but I actually took a starter on the dip. Now, it wasn't full size, but I took a starter. And my feeling was that if it can hold this previous breakout level, which was around 560, that this could be a bounce off that level. So we know as we sort of have these breakouts that we want to see it hold the previous high. So as it stair steps up, this was the previous high. So we want, if it comes down to about that level, that's okay, but we want to see it bounce off that level. So then at this point, this was the previous high, roughly. So we want to see as it comes back down that it bounces off that level, and it did. So I took a starter, and then I added at 95. Now, instead of having full size at 95, I had full size at an average of like 82. So I was in at that point because I took my starter and then added into confirmation, I had a better cost basis. So that's where I think it's become a bit of a game changer for me, because I've been able to have full size for the breakout. And of course, if it works, I can take some profit off at 602 and I'm up a little bit more because I have a better average. But if it fails, I can also get out maybe closer to break even or for a smaller loss than if I had that same size at the breakout spot. And I think also the fact is I take larger size because I wouldn't have felt comfortable going in with the same share size right at the breakout at high of day as when I already have a good cost basis and then I'm adding to a winner. So again, just to sort of reiterate, the dip trade is not going to usually have a very clear apex, like to the penny of the entry. But when you're trading it while a stock is consolidating during an ABCD pattern or during the first pullback or during a 5-minute bull flag, then you're trading in a way, the primary setup that you're trading is the first candle to make a new high. And rather than buying at the apex, you're trying to get in kind of at the bottom of the pattern, which is sort of a dip on a little flush with a stop at the low of the pattern. So your stop is the same as if you got in at the apex, but you're buying a little low. And again, being able to differentiate that this is a time to do that and that the stock isn't just going to keep going lower and lower and keep pulling back is what's a little tricky. Dip trades are also sometimes from false halts. Oh, wait, sorry. I don't think I read this whole slide. Yes, so I read that. So I don't think a dip trade has ever been my first trade on a stock, which is also worth noting. Usually I start doing dip trades once I have a little bit of a cushion. Usually on my first trades, I'm buying first pullback, micro pullback around $0.50, a whole dollar, or an entry around $0.50, a whole dollar on a stock that just has breaking news and is really strong. Usually for my first couple trades, I'm going to be focusing on those patterns that I have higher confidence in, because of course, when I start the day at zero, I don't have a cushion, right? So my first goal is kind of building that cushion with a couple of really solid setup trades. Once I have a cushion and I'm starting to feel a little bit more comfortable in the way I'm reading the stock on the level 2 and the way I'm trading it, that's when I start getting more active to buy those dips and then sell into the breakouts, or buy the dip, add through the breakout, and continue going higher. But rarely is a dip trade my first trade of the day, because it's inherently a little riskier. So I typically only start doing the trades if I already have been trading a stock very well and have some good profits and can afford to throw out small orders, maybe 1,000 or 2,000 shares, knowing my full size on the stock might be 10 to 20,000 shares. Now, if we see a dip pops right back up, I start to get a little confidence and I'll keep doing it. So I would do this on stocks that are making big moves, generally on stocks where dips are getting bought up and that they're bouncing off what I think are clear areas of support. I'm not as likely to do it on a cheaper stock priced in the $1 to $2 range. Usually for a dip to be worth considering for me, it has to be a dip of at least 15 to 20 cents. A dip of 2 to 3 cents is not enough of a dip. And a dip of 50 cents to $1 can be great. I don't really have too much as long as the pattern isn't broken. Now, dip trades can sometimes be from a false halt down. So when a stock is about to halt down and the level 2 is pinned right at that level, and then all of a sudden we see that seller on the ask start to thin out, and all of a sudden it pops up, then I can buy right there. But that's risky because sometimes they'll pop up just for a second, then they will halt down. So that's very risky. But on the other hand, because that rubber band is super stretched out to the downside, it's a strong dip. And if it does start to pop, possibly people who are shorting for the halt down and a gap lower will cover immediately. Some other long traders may take that aggressive dip trade, and then that can create enough buying volume where you do have that pop off the low. Then maybe the halt level moves down, and then all of a sudden it starts to go back up, and you're in at a good spot. So the dip trade can sometimes be from a false halt down. Sometimes it can be after a panic sell-off, sort of a flush after a false halt up, where it didn't halt and then it flushes down. And sometimes it can just be the result of a parabolic stock being so extended that we just sort of get this quick flush. Generally, dip trades are reserved for parabolic stocks. So the target is typically a bounce halfway back to the highs, but depending on my share size, I may add for a squeeze back through the highs, which would make that dip actually a bear trap. So it dips, it looks like it's going to maybe flush, and then it rips right back up. That becomes a bear trap, as short sellers were shorting that false breakdown. And we actually have an example of that on this right here, where I would say this area right in here was kind of looking like a bear trap. You know, it did a bull trap here, and then it breaks down. It looks like it's going to flush. It actually breaks the low of this candle, and then it rips right up here to 8, pulls back, and then goes right through the high. So that looks like a bear trap. And actually, even this right here looked like a bit of a bear trap because it broke the low of this pattern right there. So if we zoom that in, oh, my video's covering it. Let me move it to this side. So let me just zoom that in again. Okay, so right here, this is squeezing up. It pulls back. It does a little false breakout. And then right here, it flushes. It breaks the low of this consolidation. That's a typical spot to short. Well, it ends up ripping right back up. So if you were a dip buyer there, which would have been a little aggressive, but given the stock is so strong, that rip back up becomes a bear trap. It squeezes up, but then it goes so high, it kind of turns into a bull trap, comes back down, does another bear trap, and then rips back up, drops back down, and then breaks through that $8 kind of clear level and squeezes up. So that was maybe a cleaner spot than the dip trades, but there were still dip trades to be had on this particular trade, this stock. So the target, typically a bounce halfway back to the highs, but maybe back all the way through the high, and then adding, thinking that this might turn into a little bit of a short squeeze. But I also may take profit off the table quickly into the pop if I'm seeing sellers stacked up on the ask, and it just doesn't feel like it's really opening up very quickly. Biggest risk factor is that you're literally buying a stock that's dropping. If you are too early, you'll immediately get stopped out, or you'll have to keep adding while it's dropping to reduce your cost basis, which is one of the reasons I usually go in with smaller size to allow myself to keep averaging in. This is averaging down, which is also very risky because it's dropping and then you're adding more as it keeps dropping. This is the one scenario where I would consider doing that because as part of the strategy, I start with small size, knowing that it's better to buy low, have it go a little lower and add more than to miss the dip entirely. Because by the time it bounces, it's going to bounce so quickly that I'd be chasing the move back up. So I'd rather kind of early anticipate the dropping and be in for that bounce than miss it and be chasing the bounce. Stop losses have to be bigger, starting with smaller size, and then being able, once with full size, to tighten them up. But definitely the averaging down is a dangerous pattern. And you can choose not to average down on it. You could choose to say, I'm going to do a dip, it either works right away or I'm out, and keep the losses small. And usually when I would average down, I would start with 2,000, and if it goes lower, I would add another 2,000, and then I would add again once we're really starting to see the green on the tape. So it might start with, it might be 3 orders. So depending on what my size is for the day, it could be 3 orders of 2,000 or 4,000 or 8,000 shares, depending on the stock. But usually I would size in with 3 orders, maybe 4. So breaking up my full size down to 3 or 4 orders so I can kind of start sizing in. And actually, I wouldn't even say full size, because if full size is 50,000 shares, I'm not going to have full size from the dip. I would have half size at most when I'm fully in on the dip trade. And then I would go to full size if it rips through the apex of the first 5-minute candle to make a new high. So then that's, but just to, I never would take, I don't think I've ever taken full size of 40, 50,000 shares on a dip trade. That's just too risky. Are a bit bigger. Yep, so I see that typo. So let me fix that real quick. Thank you for that. Let's see. This is right here. Let me just back this out, and I'll change that to bit bigger. Okay. Thank you. There are some typos through these slides. There's 1,300 slides. It's bound to happen. I'm sure I could hire someone to proofread every single slide, but I think that it's not. But I change them. I change them each time I teach the classes. So anyways, so stop losses are a bit bigger. This setup works best on parabolic stocks. So how do I know when to buy? The tape should usually be red, dropping on high volume. And the moment I see a green print, It's typically when I press the buy button, knowing short sellers will likely cover it and it'll start to bounce. Stop is at the low. Sometimes I'll get in before I see the green print if we're selling off, and then it seems like the selling is starting to slow down and we're near a whole dollar. So if we're near a whole dollar or a half dollar, I might go ahead and try to do a dip right there, thinking that we might bounce off that critical level of psychological support. And it doesn't have to be above the ask. Just any green print usually is what gives me the confidence that, okay, someone's starting to cover this. And they're covering it basically as a market order. They're not just covering on the bid, because if they cover on the bid, they're a buyer, and then someone sells shares to them, right, as they're hitting the bid. So it's a red transaction. So we want to see those green transactions. The best dip trades are usually when I'm already watching the stock very closely, and then suddenly, in almost what seems like a flash, it drops 50 cents or $1 a share, and you're like, whoa, what happened? And then it recovers very quickly. So this is what I would often say is irrational. Stocks can be irrationally strong, they can be irrationally weak. So I try to sort of buy that dip right in the moment, and you'll see some examples where I'm very quick and I nail it, and other times where I'm just not right on. I do have to be careful though, because if it keeps flushing, then I could be holding into a halt going down and they could gap lower. And so I've unfortunately had a couple of really big losses where I just basically bought as something was dropping and then it got halted going down, and I was like, wow, well, that wasn't great. And in those instances, I definitely questioned dip trading. So you may choose, when you see that level of sell-off where something drops 50 cents or $1 a share, that perhaps it's not worth trying to do those dips because of the risk of maybe news that haven't come out. So I usually will already have ascending and descending support and resistance lines drawn. So as a stock starts to dip, and actually I didn't draw them on this one, but usually I would. So, as a stock like this starts to dip, maybe even on the 10-second chart, just to get it a little more dialed in, I would start to say, all right, well, what are some levels where we might catch a bounce? So this is kind of tricky because this one doesn't really have any super obvious areas where I would really draw an ascending support line. Maybe a little bit right there, but that's not that obvious. Maybe a little bit right in here. I don't know. But there's others that are better examples that I think I'll show you in a second. So when do I avoid buying dips? If the stock is dropping due to breaking news and I already know that, I'm not going to buy the dip. If I see in the chat room that news headline secondary offering, I am not going to buy that dip. If a stock drops on news and it halts going down, it's probably going to open substantially lower. This is going to have a terrible profit-loss ratio. I don't want to take that trade. If the stock is dropping simply due to panic and it's still generally trending up, it's still above the volume weighted average price, it's still generally looking strong, then it's still worth watching for a bounce as long as it's not breaking down. But I just have to be a little bit careful when you have a huge flush because of the risk that it could halt down. So the best time to trade dips is when a stock is generally strong. We would generally say that it's still on kind of that front side of trending up. Of course, the initial dip, if it goes like this and then like this, well, then that actually right there becomes the difference between the front of the move and sort of the back of the move on that dip. But since we have these prior dips, if we can draw an ascending support line and we dip right down to that, then that could be the entry for a move back higher. So this is an example of a stock that I did a number of dip trades on. This is a 10-second chart, so I dialed this in just to make it kind of a little easier to see some of these candles. So stock squeezes up and gets halted. It opens, it dips lower, and we get that dip and rip. So it dips down here, right there, and as it starts to curl back up and I see green on the tape, I buy the dip. For the rip, target is an add through the high, adding through the high, squeezes up again. Now this pullback here is a proper, well, it's not a 1-minute pullback, it's a 10-second chart, but you can see it's a little dip here, and then it curls back up. Then we get another little dip here and it curls back up. Now these are just micro pullbacks. I wouldn't necessarily say that this I would say is a dip trade because you're buying the dip for the rip. This is just a micro pullback. This is kind of a micro pullback into a halt, squeezes higher, then drops lower, and this becomes a little bit of a dip trade for the bounce off the whole dollar. So bounce off the whole dollar there, which is also the low of this candle. So it's a double bottom. So a quick dip, it pops up, doesn't really hold, goes down, halts going down. Opens, dips, comes back up, bounces, double bottom off this level. So you'll notice a lot of these dip trades are going to be around double bottoms. So, and this was kind of a bounce off of this prior halt level. Squeezes up and halts going up once, twice, 3 times. Certainly in here you could have done a dip for then that rip higher. Pulls back. This bounce off of a whole dollar, or half dollar, 16.50, rips back up. Higher, quick flush here from 18 to 17.50, so kind of a little possible dip there. And then right over here, a big quick panic flush. So a big flush down, right back up, but then it comes lower. Double bottoming at this level. That gives you a bounce higher. And then here it kind of panics, sells off a little bit more. And then in this area, potential bounce off the volume weight average price, but it doesn't hold. No doubt, looking at this chart is confusing because it's not intuitive. Why am I buying right here? Why am I buying right here? And so what can help is when we're looking for, do we have a double bottom? Potentially. That can help add a little bit more clarity. Is this a double bottom versus a previous low back here? Because then we might bounce off that level. Is this a dip and rip setup and a bounce off the previous halt level? Because that could be a spot to go long. So a lot of these actual entries are based either on a half dollar, whole dollar being support, or a double bottom in this particular example. We've got more examples though, so I don't want to lose you yet. All right, so here's CAPR. So this was a different chart. So this is a 5 minute chart. So on this one, we have a couple different things. We've got clearly a parabolic stock that goes from $2 all the way up to 11. So that's our context. Very strong stock. Now, initially, we're strong up to 7. It dips down. And this does a red to green move. Red to green at the open, gap and go setup, curls up to here. That's the high of day. Breaks through high of day, goes a little higher right there. And then this could have been a dip right there on that candle, buying sort of this previous resistance, dip off of that level, and then add for the first 5 minute candle to make a new high, confirmation. Squeezes higher up to 748. Pulls back, possibly a dip off this level, because again, that was the previous high. Little dip there, pops back up. Maybe a double bottom there. It's not exactly perfect because it did go a little lower. Squeezes up, and then this is more of a pivot. So break right there of the pivot for a move higher. Now, pops up, pull back, dip off of 748, which was the previous high. So squeezes up, dip off that level, then add for the first 5 minute candle to make a new high, possibly add again for a breakthrough high a day, taking profit on the breakthrough 8, the whole dollar. It breaks 8, it dips down. Now, dip off of that level, then for the move higher. Then here, it dips for just a second, but not exactly off the high of this candle. It doesn't go quite that low right there, right in here. Like almost, but not quite, and then it does surge higher. Now it flushes down a little harder, and in this area it can be a little trickier because it's kind of like, okay, this feels like the top of the move with that topping tail candle on high volume. So now in this area, it starts to feel like we're trading the backside of the move. So on CAPR, dips to support. So some support down here on this double bottom right there. So that would have been a fine entry for a double bottom. This one right here, you know, it's from 5 down to 440, and it's kind of straddling the volume weight average price. The low of this last pullback was like 525. So I don't know if this necessarily would have been a dip trade, but I think this one, the second one for a double bottom, would have been okay. And then the add through the volume weight average price. Micro pullback right here, and then it curls over the VWAP, and now we're starting to move higher. CAPR here again, these high volume little flashes are showing these flushes, these bottoming candles where it kind of panic sells and then comes right back up. So panic sell on higher volume and then comes right back up. Sort of panic sell off on that higher volume and then again comes right back up. So that, you'll notice your best dip trades are going to have higher volume on those candles, whether it's the 1 minute or a shorter time frame chart. The high volume and that bottoming tail is what kind of confirms that you had a little like market order flush. We know if you send a market order that a stock can, kind of flush just for a second as that market order gets absorbed by buyers. And so those little dips on higher volume, you can see another one right there and right there. That's the type of thing that we often are going to be looking for. Right back here is one as well. So we could pull up VCNX just as an example of can we just by searching, just for instance, the volume, just the candles. So can we find some of these bottoming tails? So this is a 10-second chart here. In fact, on this one, this was really strong at the open. Even these bottoming tails, there weren't a lot of big red candles, to be honest. Yeah, there really weren't too many. This was just a really strong stock. This one doesn't have any really good examples of that. it just kind of kept going higher. So anyways, not good examples on that one, but that's okay. Now look at this. So this is a sort of massive panic drop. It squeezes up here, might have been chasing a halt level, then the halt level moves up, moves a little higher, hits a high here, tops at 11, and then drops from 11 all the way down a full $1 a share to 10, and then all the way down to 960. So that's where you get that kind of panic flush down to 960, and then on high volume, and it bounces from 960 back up to 1020 to 1040. Now, whether or not I would have taken that, it's such a strong flush and most likely created that topping tail at the high. So I don't know that we would have necessarily wanted to be buying this candle right here, but you can see that it could have presented an opportunity if you were willing to be aggressive on it. Here's another one where the break of the volume weighted average price, break of support, gives that quick panic washout. And we see this a lot when a stock breaks the volume weighted average price. Now, I don't know that I would necessarily want to do a dip trade on this because this is more of a short setup. It's breaking support, and a dip, it pops up, it might just keep going lower. But in this case, this dropped a full $1 a share. So from, $9.10 down to $8.10 or so, that's a good drop. And that clearly did present an opportunity for a momentary bounce. Now, on this particular example, you have a stock that, again, was strong pre-market, but at the bell, sold off kind of hard. But, we have the 1-minute chart here. We happen to have the 200 moving average on it. And we notice, in this instance, this flush from 440 down to 360, that's an 80-cent drop. And then there's that bounce kind of right off the moving average. Could have been a dip trade. This one, I'm not as big of a fan on because of the fact that, and this is actually a 1-minute chart, I'm not as big of a fan of this one because of the fact that it's below the volume weighted average price. And so I don't usually like to be trading this setup below VWAP, although I will occasionally. When you have a big candle like that, it can certainly present an opportunity for a dip. This is a classic dip and rip right here. So we have the halt up once, halt up twice, opens, dip off this level, the high of this candle. So we would say, what was the high of the previous halt? And, it's like, I don't know, whatever that is, 360. So it dips down, dip, and then add for the first 1-minute candle to make a new high. So now instead of just adding right here, I have a starter down here. I might add as I see green right here and add more right here, which gives me a better average down about here. Now it squeezes up into another halt, and maybe I could even take some off the table. So that's that dip and the rip. Now it hits a high here and halts going up. It then opens just a little higher and dips down again. Basically a double bottom right here, almost a double bottom, maybe a dip trade there off the double bottom support, or an add for the first 1-minute candle to make a new high, which in this case was a little low, and then pops up, and then another add here for the break through the high of day into another halt. Opens higher, dips down just for a second, and then rips up. Pulls back and does the same exact pattern right here that it just did right here. It's the same pattern. Pop, pull back, rip. Pop, pull back, first candle to make a new high, and rip. This stock goes from $1.50 to $8. Clearly on lighter volume, but volume that's increasing, which is good. Tapering a little bit as it gets near the high. So, the 1 minute and the 10-second charts, I'm not really staring at the charts that closely. I'm really staring at the level 2, the time in sales, and then I glance at the chart. And I maybe on a dip trade, I'll be looking at the chart and thinking, okay, well, what was the recent low that this might bounce off of? But I'm still focusing primarily on the level 2. All right, so YTEN here. So, hi girl. All right, so this one kind of bounces off the $0.50 right here, tries to do a red to green, goes lower, breaks through the volume weighted average price, is choppy, not easy, does break through VWAP right here, pulls back, dips below the VWAP, pops back up, and starts breaking out, and right here is a nice double bottom. Double bottom at 773. Go on. So double bottom at 773 that then gives way into an add over 823 for the move up to the high, micro pullback. So this is a trade right in here where the starter could have been down here at 773, double bottom. Adding possibly over 8 the whole dollar. So maybe now with an average of about 784. Then adding at 823 for the break of this pivot, or perhaps waiting for 840 or whatever, 830, whatever that is. So let's say I double at 830, cost basis goes from 780 to 815. It pops up here to 850, Maybe I take half off the table at 8.45. Doesn't break the $0.50, little resistance. Hold half, still at 8.15, and then add back first 1 minute candle to make a new high right there at 8.45 for the break of 8.50. Sell half of that new position. My new average, if I added at 8.50, is probably 8.30. So sell half up here at 8.70. Still holding the other half at 8.30. And it squeezes up here, sell a little more at 8.75, a little more at 9. Maybe a micro pullback for the break of 9, false breakout, and I stop out the rest. So instead of taking my first trade at 8.23, I'm getting a starter down here at 73 off the double bottom. So this is kind of the perfect dip setup where the beginning, you're watching a pattern starting to form what you think may be a 5-minute bull flag or maybe a 1-minute bull flag. And you're buying off of a recent support, some level that seems logical. $0.50, whole dollar, double bottom, previous resistance now becoming support. So this is an example here of a stock that's a little higher priced, so we get those bigger washouts. From 14, it squeezes all the way up to 17, and then here flushes. Possible dip trade here around 16.50, maybe. Adding for a first 1 minute candle to make a new high, taking profit up here at 17.50. And then it flushes here hard. That's a bounce off the VWAP right there. So I could take a long right there at 16.50 again for the bounce off the volume weighted average price. It's a little aggressive. High volume, so it really sold off hard from 17 all the way to 16.20, actually below 16, 15.70. So like a 2-point drop, but it does pop back up pretty quickly. Then it pulls back a little bit more, starts to open up here, curls higher, sort of false breakout, drops down. Another bounce, not quite off the volume weighted average price, but close, but definitely off the 20 moving average. And if we notice, this is off the 20 moving average. So see that dip right there was actually off the 20. This one was off the 20 with the VWAP close by. So these sort of levels very tight. Another little dip off the 20 here. So this is a stock that happens to be respecting the 20 moving average. Some stocks respect the 9 better, some respect the VWAP better, and some stocks you'll just find that this stock, the 20 moving average could just be disregarded because this stock doesn't seem to care about it. You know, for whatever reason. We don't always know why. So this is that huge panic sell-off. So this stock, GNUS, strong pre-market, 1 minute chart, micro pullback there, goes higher, consolidation at the volume weighted average price, maybe a false breakout here. It's a little hard to tell, you know, pre-market because some of those orders that go through on the alternative display network that we don't know if that's but a little blip, opens and halts going down. Great. You never like that. So that's the opposite of a gap and go. But then first candle to make a new high, we do get a red to green on it right there. And it squeezes up here to 10, micro pullback, squeeze up to about 10.45 and it halts going up. I can tell because that candle is closing at the high in green, and then the next candle opens a little lower. It dips, rip then, so dip here, possible dip and rip setup here. So it's not perfect because the previous halt was there and it actually opened lower. So I don't know if we would have done the dip and rip on that, but definitely the first candle to make a new high back over 10.50 is a long, and it goes up to 11.50 and halts going up again. It opens, consolidates for a second, and then slams back down, halts going down. From that halt, it actually opens a little higher. Now, anytime a halt goes down and opens higher, I'm bullish on it. Stop is at the low, which was the low of the halt, which is at 10. Long here, stop at 10, squeezes back up to 11, 11.25. Then it rolls over again and halts going down a second time. Pops up for a second, but we broke below the volume weighted average price. So not great. I don't know if I would have taken that trade, but maybe. And then it halts going down again. Once, twice, 3 times. Actually, no, this might not have been, this is a 1 minute chart. So halted once right here, a second time right here, and opens way lower. This goes all the way down here. What a sell-off. And then, what a bounce. Look at that bounce. From, $4.25 up to $8. That's a 100% bounce. So this is an example that definitely overlaps with reversal trading at this point. We did get a couple dip and rips on it, but at this point right here, this is a reversal off the low. And that V pattern is picture perfect. So this did have news. There was news about a secondary offering priced at $2, but it was a shelf registration. It was actually not an offering. It was a shelf registration. And they put $2 as the price in the shelf registration, but that's a placeholder. That's not the actual offering. So there was some miscommunication. It hit the news that there was a $2 offering, but it was a shelf registration. They filed the S3. There was also a tweet from some investor that this was overpriced and was going to drop, and retail traders should be cautious. And so those two things combined to create this high volume panic sell-off. So what we got here was halt 1, halt 2. It here opens, it starts to bounce and then goes lower and halt again. So this was the first indicator. I mean, it did actually open here and pop up for a second and then go lower. And I don't remember if I tried trading it there for a bounce and stopped out, and if I tried trading it again here and stopped out. But once we were getting the first halt going up. So if I took that trade, let's say it opened at, it opened at like 425 down here. It's showing green on the tape and it's ripping up to 450, and we see the halt levels 475. The first halt going back up will almost definitely gap higher. And so as I see it's approaching the halt going back up, I might start to add into that. On resumption, it opens at 5, dips, and then rip long over 5 into the second halt going up at 550. Then it opens, it dips as there's some profit taking from people who bought down here, but it rips again and halts going up at 675. Then it opens and grinds a little higher, not halting as quickly. This is a good place on declining volume to take profit out, and then it halts going down. Opens, flushes, and then starts to kind of consolidate here. So very volatile there on that particular trade. And I want to just grab this slide. This is, we're at 830. I want to just jump in here real quick to the chapter. I just want to make sure that we do talk about this example in the reversal chapter, because it's definitely a good reversal. It's again, you could overlap dip trading and reversal trading at times. So here's chapter 9, reversals. So let's see. So this is the intro. So first candle outside Bollinger Band, yes. 5+ consecutive 5-minute candles. Do I have that one? No, I have GameStop in there, which was amazing. But this was a 1-minute chart, so this is going to be 10+ consecutive 1-minute candles, and that's pretty darn close. So we'll drop it. We'll drop it in here. Wait, did I copy and paste the wrong one? Oh, come on. All right, so 1080, 1081. Sorry, I should have just done this later, but now I'm invested. So it was 829. 829, and here we go. All right, so we'll just put this right down here, right there. All right, so when we come back to that a little bit later, we'll remember. It's not going to be today, but when we get to it. All right, so back here to this one, and let's see, which one were we on? Right there, 29. Okay, so back to here. All right, so on this one, so this is an example where the stock starts to surge back up. We get that micro pullback, break of VWAP, micro pullback right underneath it, surges higher, dip down, bounce off of the support of the volume weighted average price, bounce off the VWAP. So we love seeing that bounce off the VWAP. That's a dip, then adding possibly into the break over 19. Now this is a stock where the volume weighted average price was 16, and this went up to $21. It's $5 a share. This is a big move. I mean, this thing is really moving quickly. So that's what we certainly like to see. All right, let me put that back. And this is all pre-market, and that's fine. It's still a dip trade. It's still a good setup pre-market for the dip right there. Dip trade off ascending support. So in this case here, connected kind of down here and right in here, it looks like. And then as it pulls back right here, that creates a dip off this level. Right in here, a similar dip off that level, right in here. So as we project that line forward, we can start to see where we may see dip trades off of that ascending support line. This was a little bit of a double bottom dip trade, and this was as well. So it came down sort of a bull trap, then a drop and a pop back up, another double bottom, pop back up. Not a huge range on this stock from 440 to 480, not nearly as big as the other one, but still worth watching. Dip trade off a double bottom here. So this was the double bottom level for $4, 402. It also is psychological support. So it hits 4, comes back up, comes back down, bounce off 4. That's the spot we look for the long and the move higher. This also has the VWAP at 384. So I would have been comfortable adding long at 4, knowing I could add more at 390 or 385 and sort of scale in for that bounce off either double bottom or the volume weighted average price. So again here, let's look at this. So this one, I'm trying to see where, exactly what I'm looking at here. So we have this ascending support line right here. It breaks. Then it becomes resistance, sells off, rips up here, drops down, pulls back up here, comes back up, breaks through that level here, up to the high. And it looks like perhaps I was kind of drawing it as a double bottom sort of at this level here of 80 and a bounce off of ascending support. It's not perfect, but you can kind of see clearly we had this level, and this level was significant pre-market, and we kind of hit it right here before breaking it. Then we come back down and bounce off of it. So that could have been a dip trade off of ascending support here. So I'm actually going to say, I'm going to change this to dip trade off ascending support. I think that's a little more accurate for this particular one. All right. And here's another dip trade off ascending support connecting right here, and then projecting forward that when I saw it coming down here, that could be a dip trade off this level. Remember, ascending support, whether you're on a 10-second or a 1 minute, it doesn't really matter, because if we look at this time frame here, let me just get rid of these lines. So let's just try to find a line that we can draw that makes sense on this stock. So let's say we're on the 10-second chart and we're saying, okay, there's a bit of sort of support, you know, right through here. All right. So maybe I say this is a dip trade because it's hitting that level right there. That's 10-second chart. Well, the 1 minute's the same level. It's the same line. We're still marking the same high and low. You could switch to a 5 minute and it's still the same line, right? Now it changes, obviously, the further out you go, but in a 10-second, you're just zooming in essentially to the same highs and lows. So perhaps it's cutting a little too much through the price right here, and maybe we would say, you know, this is actually going to be better if you draw it just a little lower. I don't know, just for instance. But in any case, you can tell that for the most part, what the price action is, so that's a nice thing with the trend line, that when you draw it, you could be looking at either the 10-second, the 1 minute, or the 5 minute. You just, if you draw it super zoomed in on the 10-second, then maybe it doesn't apply further out. But if you do zoom out and just double check, it should, you know, this seems to carry fairly well back quite a ways. So I think that even though it's a 10-second chart, is still fine. It's very valid, including on the 1 minute. It's still a clear descending support line in this case. So we have a nice one there. And now let's look at some live trading examples. So let me bring this down here and we'll pull up our video. All right, so this was a panic. I call this a panic sell. All right, so let's look at this one. Let's get oriented. So panic sell, false halt, then pop back up, quick but risky. Now in this section, we have like 10 or maybe even 15 live examples, which I think is going to be really helpful. I think the live examples are going to help maybe more than the static examples of just the chart, just because of how sort of complex this setup can kind of be. All right, so let's have a sip of tea here, because we're going to get into the weeds on this setup. Maybe a gummy bear? That's good. A little sugar? Maybe a second gummy bear. I don't know. So chewy. Okay. Well, the white one is pineapple, so I had a green one and a white one. It's just kind of like a pineapple margarita thing. Okay. All right, so I think we're in good shape now. Okay, so let's play this video. It's a 38-second long video, so it's a pretty short one. Okay, so ABIO is the stock I'm watching. How much is it up? 284%. All right, so we're up 284%. And all of a sudden, look at that. Just like that, it just drops so quick. So that to me is irrational. Now, there's a possibility that breaking news has just come out. Because we know the algo kind of quick flush that comes with breaking news, that's why I get a little cautious. But it's up quite a bit, so we're watching it here. And just like that, it goes from 16 down to 14.10. So I watch it for a second. And it's not halting. There's a seller at 24. And I did a dip trade with 1,000 shares. Now, I don't know how much I'm up yet today, but that's only 1,000 shares at 14.21. Now, it's starting to kind of base here. If this was really an algo news halt, it probably would have already halted going down. Halt level moved down to 396. Now we've got the whole dollar right here. Now it looks like it might halt going down, but I've only got 1,000 shares at 21. Okay, it looks like it's going to halt here. Stacked up, but a lot of orders going through. Hold up. Do you see what's happening right there? That is about to do a false halt. So let's go back here to the beginning of this video. Yeah, I don't know if I can even play it on a shorter, but in any case, we'll just go with it here. I can pause it. So we get that quick flush. Now, if I click the buy button right here, I'll probably get my order rejected for being 10% above the current price. So I think I do shift 1. So yeah, I did shift 1 right there, and I got filled. Those are my orders, I think, right there at 21. And I put a second order at 28, shift 1, but it pops up, and then I cancel it. So there's 24, 45 on the ask, some more green going through. So this could be some short sellers covering, you know, okay, wow, it just dropped $1.50 a share, $2 a share, take a little profit. Now it's coming. Shift 1 is above the ask. So if we go in here on my hotkeys, just to reiterate, shift 1 is buy. It's actually 20 cents above the ask. So that hotkey actually won't work on a $1.50 stock because it's 20% above the current price. But I adjusted it that way because of how I was trading GameStop, and I kept not getting filled on GameStop because it was moving so fast, and I just haven't changed it back. So my skis are still tuned to the GameStop stock. All right, so using our skiing, waxing, and getting your system adjusted to the right conditions. Okay, so right here, it looks like it's stacked up, right? This is that expression that I use. It's stacked up. We see the sellers at 28, you know, but orders are definitely going through at 96, the seller of 28,000 shares. So it's stacked up, and then right here, just like that. What probably happened right there is an order for like 30,000 shares. Someone probably bought 30,000 shares. Were they buying to cover? Were they buying a dip? I don't know. Don't know. But that is a big deal because now this looks like it's going to do a false halt, and there's green. This is this nuance. This is the little stuff. And this doesn't by any means trading this type of stuff doesn't have, I'm sure you could be a successful trader and never trade this stuff. John L10 in the chat room, I don't know, or he's a student, of course. I don't know that he really trades false halts going down. I'm not even sure how much he does dip trades. And, you know, he's got his $1 million badge. So he's self-proclaimed turtle of trading. He goes slow. He rarely has green days that are more than 4,000 or 5,000. He's slow and steady, and he's been doing it for a long time. And, you know, he's doing well. So this, if you feel like this is crazy, I'm not going to totally disagree with you, but you'll see me trade it from time to time, and so I might as well teach it, and you use it if you want or don't if you don't. But so right there, those 3 prints, it was first the stack disappeared. So before those prints went through, the stack disappears, and just like that, do I add right here? Yep, I added right there. So I just added, and now I'm looking at the time. So I got filled at 1398. I'm in now 4,000 shares at 1404. Now this is risky because the halt level's right here. If I want to sell, I'm not going to necessarily get filled if I hit the bid at 96. But here we go. Now the bid is popped up, 1420 by 1440. I took it right off the table, just like that, on the ask. I honestly, I sold too soon. I sold it too soon. I don't know why I sold that one as soon as I did, but it was risky. So, hey, in at 1404 and sold it at 1439. That's almost 40 cents on 4,000 shares. 4 times 4, $1,600. So, James, the reason the big order I don't think would have been green. So it is kind of funny when something is halting going down, the order is going through at 96. Technically, because you're matched here, technically, I think this might be functioning as the bid price. I'm not exactly sure, but it's very common that all the orders going through are red, and then the second it goes up. So but there's no other explanation because you cannot sell. You can't, I mean, you can try to sell, but you only get sold if someone is pressing the buy button. And so you're pressing the sell button, someone's buying from you, but it's weird because yeah, it's like you're selling on the bid but not getting filled. It's weird. So I don't really know why that's the case, but once it starts to pop back up, it goes back to being kind of normal and green on the ask. Okay, so that was one example. So here we go, our old friend Pixie. All right, so let's look at Pixie. Let's see, this is a stock that we've traded, of course. All right, so let's get the quality bumped up here. All right, so here we go. So this is coming down. I'm already looking. I've already got a line drawn at 1258. Possible double bottom, but I don't know where I trade it. Let's see. It looks like. All right, so it looks like it's a few minutes in. So why don't we kind of, well, let's see. No, it looks like that is a little dip trade there. So let's just look at that for 1 second. That looks like I try to do a double bottom. So 1258 is our previous support. 1258, double bottom. Right there. You get that quick flush? That quick flush is what I look for. So that's what I really prefer for taking a dip trade, that all of a sudden you just kind of have that, kind of like capitulation where it's just it just kind of is a flash. You know, it just flashes down, and that gives me an opportunity to now buy this cheap. All these orders at 63. Now I want to be careful. If it does break through the $0.50, halt level down is 1228, so I can see that. And I don't know why some of the colors on these videos, these videos are recorded over the course of years on different computers, and sometimes I've changed my layout, the color and the tint a little bit, so there's some variation there. Don't worry about that. So 1250, so I take a starter hotkey, shift 1. Filled at 1274 between the spread. We've got a bid at 1250. It's going to hold that level. There we go. There's 1315. So now we pretty much have the double bottom confirmed here at 1258. And in this case, you know, I take that off the table for 50 cents. That's $500. That's not bad. So Michael says, Ross, how do you place an order lower than the current price? I automatically get filled at the current price when I try to set a price lower. So let's just open up the simulator for 1 second on this one. Oops, that's not the simulator. That's my old. Okay, so let's see. It's over here. So let's get logged in. Just to make sure we're kind of all on the same page of how these orders are going through. I'm using a marketable limit order. So I've got to adjust this here. It's all got kind of pushed out of place. All right, so if I want to buy this stock here, if I use the Shift 1 hotkey, I'm going to get filled right at the current price. Come on. Having a hard time moving this. There we go. So if I press Shift 1, I'm going to fill right here. Whoops. Oh, hold on. I got to go change my hotkeys. All right, so settings, hotkeys, Shift 1. I'm going to do 150 shares. Load and go. All right, so Shift 1, boom. Now, hold up. View, settings, what's the price set at? Hotkeys, price is the bid. So I always buy the ask, and then I do an offset above the ask. So that's a hotkey. So as soon as I press Shift 1, that order is going to go through instantly at the current price. I press Control Z, I'm out at 76. Buy the ask, sell the bid in those two hotkeys. If I want to get in lower, I'd have to put the order down here as my limit and then press buy. And then the order is going to sit there. But I don't do that for dips. I never really do that. I mean, I could, and maybe that's the next level for me in terms of confidence, to actually put the order to really anticipate that it will double bottom off of something like 1258. But I don't do that. So for me, I press Shift 1, and in the case of this trade, this entry, wherever it was at 1274, I just happened to get filled between the spread. So I got filled between the spread because there was a hidden seller. So I think is it right? No, I'd already sold. So let's back up here just a second. So it's gonna flash down. I'm gonna press Shift 1. And now in the simulator, in any simulator, you'll never fill between the spread. You'll always fill at the ask, because the simulator doesn't have hidden buyers and sellers. So it doesn't match you at midpoint. So right here, it's 58 by 62, and I'm going to press shift 1, 74. So 74 was on the ask when I pressed shift 1, right? So I filled basically at 74. So that looks like I filled low, but I really just filled with a hotkey. And yeah, with the offset probably of 10 cents or something like that. Regardless of share size, I always keep the offset, whether it's 5,000 or 100 or whatever, however many shares I'm trading, because I want to make sure if I'm trading a $13 stock that I have a little room. Otherwise, I'm not going to get filled. So a 5 cent, 15 cent hotkey offset is fine. 20 cents could start to be a little too much. I might be getting filled a little too high. All right, so now let's, so that was a dip trade there. And, oh, did I take another one here? Let's see. So I took another one right here. I did a second attempt at, so it did drop just a little bit lower here, and I'm taking a second attempt thinking that if it holds the $0.50 and gets right back above it, oh, it's actually a false halt right here. Look at that, false halt. Long at 28, false halt. Now, oh, uh-oh, I might be early. I might be early. No, okay, I guess I'm all right. That was a close one. 49, still 28 on the bid. So I take an order at 46 because I'm like, uh-oh, I might be holding this thing into a halt going down. So I actually got out break even at 28. Not bad, small size. Oh, and look, it did end up going. I got back in at 1246, and then now I'm in a little high. Orders at 1273 to sell on the ask. So filling on the ask there at 1273, I'm a hidden order. It shows 1274. My order at 1273 gets filled first. So taking the rest out, kind of botched that, was a little aggressive on that dip trade. Now it's 12:15. Am I going to do it again? Should I do it again? Looks like it's about to false halt. It looks like it might. We're right at the volume weighted average price. We're bouncing right off that level. But it's kind of chasing the halt levels going down. So it's not, I don't know that this is, I don't know. This one might be too risky to keep doing this on. So 12:03, now it's below the volume weighted average price. And it's now halted going down. Okay, so let's move a little forward. Okay, so let's back that up for a second. So it's currently halted. Now it was halted down at 12:03. We're currently showing 1188 by 12:02. Resumption is going to be coming up in just a second, I think. So there's resumption, 1155 on the bid, 12 on the ask. This could be a dip and a quick pop. It looks like a bottoming tail right here. Big spread. It's not the traditional dip and rip. The dip and rip is usually when a stock is halted going up, not going down. But I went ahead and took the trade here. This is aggressive because it's below the volume weighted average price. It's aggressive. So and look at that, take it right off the table. But of course I'm buying, look at that, and then all the way almost to a halt going back up. So the float. We know that the float on this was like 1 million shares. It was a much lower float stock, had a catalyst. Notice that we bounced almost right off the 200 moving average on the daily chart. COVID-19 catalyst. So, I took the risk on it, but that was a risky trade. And because it was a risky trade, I sold it kind of quickly. I didn't hold it for the bigger move. The dotted line on the chart, the yellow, is today's open price. So that's today's open price that we've got set right there. All right, so a couple dip trades on this. Let's see. So I think we're going to have another one here in a second. Now it's back down to the low, looking for another dip. So this one's actually working fairly well for me, buying the lows. Halt going down at 11. Here we go. Are we going to get another false halt here? Now, the fact is, this is where we start getting into, the kind of bottom fishing of, it's clearly trending down. It's not bullish. It's clearly on the backside of the move, and I'm just trying to scrape little gains off the low. This is not where home runs come from by any means. Not in this context. Home runs can come from a dip trade, but not on a dip trade when a stock is at the low of day. It's pulling back hard. Red candle at the open. But in any case, false halt, maybe. I'm buying at 11. Looking for that pop. There's 1110. So that's the false halt pattern that we look for. There we go. There's 1150, 1170. That's 60 cents a share on the ask. Out, just like that. So by getting in that low, of course, and then now here we go again, 1065. I'm back in. I'm doing it again, 1065. Buying the dip And now here it goes back up towards 11. Smaller size on these trades. When we look at some examples, you might see me trading with much bigger size, but not in this context. So yeah, some kind of wild stuff on this stock. Now, does it end up coming back up? Back over? And it does. It does later end up reclaiming the volume weighted average price. And now this is where you're going to see me taking bigger size. So now here, I don't know if we get dip trades necessarily, but the first 5-minute candle to make a new high is going to be our confirmation here on the break through the VWAP. I'm in at 48. This is not a dip trade. This is a break through this level right here, right there, and a $0.50 break. There's 1268. I put an order to take some off the table for 20 cents. Then I cancel it. I think I changed my mind and I say, you know what? No, I'm going big on this. I'm adding now. I'm going to look to add for the squeeze to 13. Halt level's 1307. There we go. 95. Adding. Now I'm up to 6,500 shares. Dips down to 68 for a second. Back to 95. Don't love that. Can it get through 13? That's the whole dollar. And this definitely looked like the backside of the move until it reclaimed the volume weighted average price. And now, even though it's still got this issue from the open with a high volume, this is where we're getting the break of VWAP, and sometimes these ones can be strong. And this one does end up being strong. So we get the move here to 13. It continues higher. There's 14. Now, look at this, all the way back to 15. Tap, though, of the 200 moving average. So through this area, did I take any bigger size positions? So that's that one there that I took. That was nice. Did I get another one up in this area? In at 13.16. Taking a little off the table. Added there for the squeeze up to 14. We're missing that break of... Oh, it looks like I might have paused the video. Or sometimes I'll splice the video just to make them shorter for the live examples here. So I think that's what happened. So anyways, I don't remember how high this one goes. But... now we're forming actually a 5-minute bull flag right there. But then it comes back below the volume weighted average price. Looks like I've got a trade here, a dip at 1250. This one looks like an example of one going the wrong way. So I'm probably going to have to cut it if it breaks below the psychological support of 12. I added a little more there. That's averaging down. Stop is 12. I want to see if I can get it back over 1250. If I can get out with profit or break even at least. If it breaks 12, I'm going to have to cut the loss. This is a double bottom here, right at 12, right there and right there. But I'm in a little early with 1239 average. So now it comes back up. I start to add as it looks like it's starting to base out, but it's heavy at 38. It needs to break through that level. There it goes. Comes up and I get out for 10 cents of profit. And then look at that dramatic sell-off. So let's just look at that for a second. We're coming back to the volume weighted average price, and then it rejects it violently here from 13 down to 1150. It could give a dip trade on such a big rejection, but that's clearly a false breakout on the 5. This is just not holding up strongly enough. So let's look at the next example. All right, we'll leave this here. Okay, so next example is huge rip, false halt, going down, then rip all the way back to 29. Oh my goodness, I'm excited. Okay, let's see what this has for us. All right, so nice and clear, good. So JFIN, okay. Whoa, all right, so what do we have? Let's get context. So this is a stock that halted going up. So it halted going up at 29.61 after breaking out from 20. So it went up $9 a share and then opens lower. So yesterday in the last class in chapter 8, when we were talking about halts, I mentioned how the halt behavior has become a little more erratic, and I was attributing that, I thought, to so many beginner traders in the market not understanding halts and panicking and selling. And this is an example where the stock halts going up at 29 and then opens down here at like 24. What? Why is this happening? It doesn't make sense. Usually they halt up and they open higher and they continue. So all the way down to 1988. Look at that rejection. And there was not anything that happened. There was no news. There was nothing that came out while this was halted to justify this dropping $10 a share. And definitely here a reminder for those that, you could have had 10,000 shares of this long at 20 bucks and been holding the whole thing. You'd be up $90,000, and right now you'd be back to break even. Well, you'd be potentially red if this halt's going down and gaps lower. That's why I always take profit off the table. I pay myself. Now, yes, I get out and then I'll get back in sometimes higher, but it's still the right move because each of those trades, I have to cut my losses quickly and take those profits as it goes. So here we have this drop here, 1988, and I buy the dip. I look at this as incredibly irrational. relatively light volume on this candle, and I think it's going to bounce. So I'm in 3,000 shares at 1988. Okay, I'm stepping up to the plate because people are panicking right now to sell. So this is risky. Is it going to halt? Uh-oh. 15 seconds. Okay. So we know the timer is 15 seconds. And if I want to sell right now, I could press the sell button, but I would only get filled if someone else presses the buy button for 3,000 shares and there isn't anyone else in front of me trying to sell. But there are people in front of me trying to sell. That's why it's pinned at 988. But now it's only 200 shares there. And I add more. Now I've got 4,000 shares. Okay. That's the same thing we saw on that other stock. Isn't that just identical? So what do you think is going to happen? Now I've got 5,000 shares at 93. Oh my goodness. Is that 21.88 I see on the ask? That's $2 a share on the ask. Now we've got a 2-point spread. If I sold on the ask right now, I'd be up 10,000 bucks. Let's watch this. This is definitely confirming the bounce. Needs to break, here we go. Needs to break 21, I was going to say, now 21.50. I'm taking half off the table, 21.78. $5,000. There, oh my goodness. I just see 24. 21, and I said it needs to break over 21. Let's back this up. Let's just watch it again. Let's go back to the beginning. All right, so looking for the false halt. Okay, only one order's left. That's where I'm thinking false halt. False halt. And maybe people are covering who were shorting into this squeeze, and then we're all of a sudden like, whoa, thank goodness, it's opened lower. Maybe people are covering who shorted on the resumption, or maybe the only people that are pressing the buy button are people buying the dip. I don't know, but there's some buying going through. 2011. So now flushes back to the low, 1988. I don't love that. But it pops then up to 2188. Oh my gosh. And an order goes through at 2188 for 200 shares. And some at 2099 and some at 2109. Orders are going through up there. Now it's 2178, 2114. 2114, 97 on the bid, but we saw 20 on the bid for a second, 2046 on the bid by 2113. 2005 on the bid, back to the low. So some people hitting the bid there, 2010. Some people may be happy to get out here and not be holding into a halt going down. I'm still holding. Now it's starting to base right here above 20. If it can break 21. I wouldn't necessarily call this I don't know what I'd call this. It's not exactly a micro pullback, but we know it tapped 2178 or 2188, and now it's kind of pulling back. So if it get back through 2178, that is definitely confirming the bounce. There's 2113. There's 2178. Here would be a place aggressively that I could add. And maybe today I would have. But on this day, I sold half. And that's kind of funny how on one day, your instinct is to double at a spot like this up to 10,000 shares, go for the home run. And then on another day, I got to be a little more conservative. I've got to be a little more on the defensive. I got to take the profit off the table. Depends on where you sit on the day, the week, the month, your confidence. There's a lot of factors. So I take half off the table there. Now I see 23. Blows through 22, goes right to 23. Right to 24, but back to 2288. I put an order at 2298, and I start filling. Gone, 1,200 shares. Are you kidding me? So now the question is, okay, so I got the dip trade on the false halt on that panic. But now if I want to get back in, where do I get back in? 24? Maybe $24? Taking a little more off the table. It's a funny 1-minute chart because it's got that topping tail. But look at that, 24.80? Are you for real? I'm in at 1993. I'm up 3,000 bucks. $5 a share. There's 25. Taking a little more off. There's 26. 26. Now, when you have a drop like this, and we've all been there, let's say you are long this at 27, and you're up $2 a share into the halt, and you're like, yes, awesome. It opens, it flushes down, you stop out for a $5,000 loss. So you stop out. Then it starts ripping back up, and you're like, not today. You jump back in. So now, as it rips back to the high, all the people that got shaken out, some of them, not all of them, but some of them are going to be thinking, I'm getting back in this thing. It got me once, but I'm getting it back. Getting back in. And then you do have people that may be short who are saying, uh-oh, what is happening with this stock? Is it seriously up $5 a share? I just shorted at 20 bucks. I thought it was going to halt going down. The halt going up is 28.07. So there, I just added back. That is an aggressive add back. But at this point, the volume, first 1 minute candle to make a new high, target 29. So added there, 2,000 shares. New cost basis 25.24. Cost basis has jumped up. Adding a little bit more here. Now sizing up, looking for the halt going up. And I may, because this halted high and opened lower, take profit going into that halt. Taking some off the table over 28. No, added actually. So I'm shocked. And then taking some off the table there. As the halt level jumps up, almost perfect timing. Okay, so holding at 26.55. And now look at this, we're back to 29. What an epic recovery. Added at 29, that was aggressive. Halt levels, that was too aggressive. That was, look at that, and just look at that, down $6,000 like that. So why did I add right there? That was a stupid ad because up here, I'm in it, let's see, let's back that up. So adding here and then selling into the halt, that's fine, I guess. I don't know why I added right there and then sold right away. But in any case, it goes to 29. The halt level is 29.12. Why would I add right at the halt level? I mean, I guess I must have been thinking maybe this will halt going up. It's the first 5 minute candle to make a new high. If it hits new high a day and halts going up. But honestly, adding right here, that's stupid. That's stupid. I don't know why I did that because the halt level is 29.12. So it's probably going to go up 12 cents and then get halted. I'm in at 28. I mean, I don't know. I was adding to the winner, but then watch this. 28.50, a big sort of, big chunk of selling. 28.50 on the bid. Now people panic a little bit. They see that red. This is so top heavy. Short sellers are like, okay, I'm going short up here. I'm in at 27.98. And there's 28 on the bid. I should hit the bid. There's 27.30. There's 26.50. There's 26. I'm down $2 a share. There's 25.50. There's 25. I'm down 13,000 bucks. Now, I could do a dip trade on this, but the problem with this is that I'm already in at 27.23. So I went ahead and added at 26.40 down here. But what this is doing now, it brought my cost basis down by 75 cents to 27.23. And there's 27.22 on the ask. There's 27.94. This is an opportunity right now to get out break even. But selling 6,000 shares on this is not as easy because it's big spreads. So if I already am in it and then I start adding on the dip, I'm creating a much bigger position, and then trying to unwind that position can be more difficult. So I'm holding it right now and probably praying that it goes right back to 29. So here the prayers are being answered. Oh my God. There's 29.30. And I added. I added again, another 1,000 shares for the break of 29. There's 29.30, and I didn't take any off the table right here. I'm up 11,000 now. Well, I'm in at 27.46. If I sell at 29.46, that'd be a $15,000 winner. There's now back to 27.91 on the bid. Okay, is it going to break through 29.50? It has to break. Here we go. This is game time. It's now or never, and I add it again. $30. This either goes to $30 right now, or I'm done. Uh-oh. I don't like that. I'm in at 27.50 with 8,400 shares. And now we have, you can see here on the bid, 27.95, but it was 27.50 for just a second. So now I've increased my size. We're beginning to form a 1 minute pullback on the right here. You can see this could form a proper 1 minute pullback. Now a proper 1 minute pullback would be terrific, but not when you're holding at 27.50. I'm in too high. So now I'm holding again. And I could sell this. I could sell half and another half. 2 orders of 4,000 shares shouldn't be too much of a problem. My prayers have been answered. And I added again at 29.50. I'm going all in. I'm in this trade with about $300,000. Oh my gosh. $25. Look at that. Look at that flush. Now, I hit the bid twice. I sold half and I sold a quarter. I sold half and half again, 27.90 and 27.50. So this is one of those trades where I really stepped up to the plate for the big home run. I was going for the grand slam. 10,000 shares at 27.77. On the ask, that's $18,000 on the ask. If it breaks through 30 and goes up to 35.40, I mean, we're talking about a huge trade. And right there, it stalled out at high a day, double top at the high. Where do I press the sell button? So now it's 28.44. And right there, I say, nope, actually, right there, I put an order to sell on the ask. It doesn't fill. Now I'm back to break even on the bid, and I sold half, filled at 27.90. Another half. Now I'm still holding 2,300 shares, down $2.50 a share. Now this may end up still working. And I'm unwind. Oh, did I do a dip trade there? I actually did a dip trade on that. But this may work as a 1 minute pullback for the breakthrough 29.60. There may still be a trade here, but I sized up and then I couldn't hold through this next pullback. If I had, I'd be down 25,000. So there's back up to 28, back to 26, and now it's starting to kind of fizzle out a little bit. So the dip trade there, the big one, was the dip on the false halt going down. Okay, so that was a pretty incredible trade though. And sometimes it is after a big winner that I'll start to kind of get really aggressive because I get overconfident. You know, I had one really good trade there and then I start going for, you know, the next one. So on this one here, this stock coming right down to the volume weighted average price. Okay, so on our next example here, and volume weighted average price is right here, the orange dotted line, $20.24. So nice dip from 29 bucks. Oh, wait, this is the same stock. So anyways, so right here, we're coming down to, we had that consolidation. It actually did make new highs. No, it didn't. This was that pullback. This was where I stopped out. Then right here, all of a sudden, hard sell-off. Doesn't this look kind of like that head and shoulders pattern? It kind of looks like that where we have the shoulder, the head, and then the shoulder. Not perfect, but it does have that look on the 1 minute. So anyways, I tried to do a dip trade right here. Hey, it worked last time. Why not? So I start buying the dip at 2024, 4,000 shares. Uh-oh. That's still stacked up. Oh, no. So here, now we're seeing 20. Okay, that's not bad, I guess. Uh-oh. So now I'm in this halt. I put an order to try to buy the dip. I'm hoping that I'll be able to get filled. I'm thinking that this might open higher. So hands, I have one order out at 21 to add. Now let's see, what was the time? 27. So let's zoom a little further forward. So I've got my order at 21, and I'm going to look to fill on the resumption. Okay, so this isn't too bad. We're showing 2040. Okay. Looks like we're going to open just a little higher. I'm going to add on this and then look for a springboard right off the VWAP, the volume weighted average price. Okay, let's go. I think this might be okay. I might be okay. I'm going to add. My stop is around 19. I've got a cushion on the day. Okay, so orders at 21. So let's watch this here on resumption. So I filled, and there you go. Look at that pop. Okay, let me back this up. Sorry. So there's the fill. So I fill, and right there we open, and we surge back up. I'm in at 2030 with 6,500 shares. That's 21.94 on the ask. So let's watch this resumption. Okay, so resumption is going to be in about 2 seconds, right? Here we go. Okay, it hasn't resumed yet. Is it going to be a 5-minute long halt? A 10-minute long halt, I mean? I certainly hope not. Because that means it's probably going to gap down. But it looks like it's going to open slightly higher, which is bullish. It's a double bottom, bounce off the VWAP. This is the right time. This is the right spot. So I've got my order to add at 21. Now, I fill, and I don't actually know. This is not scrolled all the way down. I suspect I filled. It looks like I filled around 2040, probably right there. $20.40, because that's where the orders are going through. So my order is out there to buy while it's halted. It's on NASDAQ. And then immediately on resumption, my order fills instantly. Now, the most I would have gotten filled at is 21, right? So I add there. I'm in at 2030. That's 21.94 on the ask. That's 21.81 on the bid. But remember what this did last time. Last time it did a big bounce. So now I'm like, well, let's give this a second. Let's see what it wants to do. So taking a little off the table, only a little bit there. Now is it going to break through 22? Adding for the break of 22, taking a little off the table. In at 22.50. There's or 20.50. And not bad. Not bad. Was it what I planned on? No. Because I thought it was going to do a false halt. That's what I thought was going to happen. It did a real halt. But the setup was still good. Double bottom, bounce off the VWAP. $127,000 on the day. So that was a great day. Now, was it a picture perfect trade? I suppose not, but it was not terrible. I've had worse. Okay, so that again, that's that dip there into the false halt. That's not something most of you guys are going to be doing. Probably, maybe ever. It took me a long time to get comfortable with doing something like that. It takes some nerves of steel and an ability to say, I can lose $15,000 on this, and it's not going to change my life. I have proven that this year. I could lose almost $300,000 in one day, and it doesn't change my life. I made almost $500,000 in one day, and that also didn't really change my life. So, you don't want to trade with amounts of money that are more than, that get to a place where you're like, that would have paid off my entire mortgage or something like that. All right, so bounce after a halt going down. Okay, so this is a little bit more of a traditional reversal setup on SRNE. Oops, sorry. So I'm just actually going to copy and paste this here. One. I don't know. I don't remember if this is another example where it's in the momentum chapter, but to be honest, this is a reversal trade because this is at the low. It's at the low of day. The pre-market double bottom is 842. It's a halt going down, but I wouldn't really say that at this point this is what we would sort of call the traditional dip trade because of just how much it dropped. So I'm gonna have to go. I'm gonna want to check to see. Let's see. Where is this? Where was slide? I'm just curious whether or not I have this one also in the reversal chapter. But I'm just gonna make a note on it. So this is slide 839. Also a reversal. SRNE. And I mean, it's okay. I don't need to duplicate. If we've already seen it here, we don't need to look at it in both. Like I said, there's a lot of overlap at times. So this kind of was a momentum stock earlier. It pulls back and then consolidates. So here we're looking for resumption. There's the resumption. It opens basically flat. That's bullish. Halts down, opens flat, bullish. Quick long, right? Looking for the long right here. Boom, boom. Waiting. Okay, waiting for a little more confirmation, I guess. Or maybe I just fumbled my hotkeys, but I'm in there at 62, but only 1,000 shares. New orders at 82. Oh, to sell. So not really, I don't know. But first candle to make a new high, first 1 minute candle to make a new high. You can see the setup there. It just wasn't really, I don't know, wasn't really what I would call picture perfect. But, my trade execution, not really picture perfect, but not a bad reversal off the low. All right, so let's go and look at another one here. All right, so this is long out of a halt going down again. All right, so similar setup here on this one. Oops. Okay, so let's look at this. So another example of a flush, hard sell-off here. Halt going down is $1.66. Oh, okay, so sorry. So this was halted down at 211. It resumes. I see green, punch it immediately. As soon as I'm seeing that green, I'm punching it. Stop here, just below $1. So keeping a pretty tight stop below $1 or below $2. Taking a little off the table. It's not really bouncing as much as I would have liked. And I don't want to hold it really below 2, so it comes back down. So kind of a quick dip on that reversal. Both of these last two examples on slide 39 and slide 40 are really, I mean, again, dip trades, dip off out of the halt coming down, but also a bit more of a reversal. The trades on JFIN are better examples of the dip because it was a bounce off the volume weighted average price, or a dip on that halt going down while still in a bullish context. So quick flush, then a pop off the lows. All right, so this is ABIO. This feels familiar. I don't remember if we already looked at this one. So double bottom down here looks like about 1160. So let's just watch this again if we haven't already watched it. Quick flush right there. I punch it. I fill at 1195. 6,000 shares, 1199. It's close enough to a double bottom. Stop is around 1160. Added there, 1230. Now we're getting a bottoming tail. We've got this bottoming tail right here. First candle to make a new high. So I take a little off the table to reduce risk. Could have alternatively just held the whole thing and then added into the first 1 minute candle to make a new high. But in this case, from 12, took the 30, 40 cents off the table. That's not bad. Yep, so that's the extent of the trade. So back here, flash, that panic sell-off, that panic sell is the dip. All of a sudden, just 50 cents, 75 cents gone. Buy that dip up, pops pretty much right back up. So I like buying those types of flash kind of flushes. They're kind of like a panic washout, just quickly drops and then right back up. It happens so often. And I try, if I'm in when that happens, not to panic sell, but to add. But like I said, sometimes, like the case was today, I will add, or I will sell if I'm in with too much size and I'm like, I can't afford this to, what if this really goes wrong? I can't afford this to go really bad on me. All right, so now we've got another one here. So quick dip trade. I say my note on it is that it's perfect, not perfect. Okay, so let's see. So this is again on ABIO. So just a bunch of examples on this particular stock on this day. I think I clipped each of them in a small little spot. So, right, so we got the bounce off of 1160, I guess, already. Look at that look at that flush. Again, this stock is just, it keeps kind of doing that. It just all of a sudden, like market order flushes 50 cents. It's 85 on the bid, 84 on the bid. Oops, sorry. 84 on the bid. Couple red orders at 80. And then it drops to 1116, 1124. It's weird. That's a big flush. So 1126. This has got 40 million shares of volume. So, I step up to the plate. I'm buying that dip a little bit, 1128, and there's a pop back up to 1160. So on a stock like this is where I would say I'm kind of getting into the flow state where I'm just actively trading it. I'm buying the dips, I'm selling to the breakouts, I'm buying the dips, I'm adding into the breakouts, and continuing. So just being really aggressive on these. Once I'm in the zone, I just keep trading these stocks until I start to feel like I'm not making money anymore, and then I say, all right, enough's enough, I'll call it a day. So on this bounce, it didn't really bounce up all that much. It's a small winner, but not a big bounce by any means. All right, so we've got, let's see, we'll keep going here. Obviously, those of you guys watching this in the LMS, you're welcome to pause and take a break and resume later if you need to. So let's see, let's look at, oops, no. So let me open this one up again. So this is SNDX, all right? So this one is a dip trade. I've got 1,000 shares. Well, let's see, let me play it. Okay, so SNDX here, all of a sudden giving us that panic sell-off from 17. It's easy to borrow, so you may have some short sellers there. There's the halt level down 15.30. There's 16. Adding on the dip right underneath that $16. It's kind of, I'm looking for a bounce off the volume weighted average price. If we bottoming tail and then bounce up, then that's okay. But 1,000 shares, not big size. Happy to take half off the table for 50 cents, and I'm out there for $500, $400. So the bounce there, the level was the volume weighted average price, buying right around the $half, whole dollar. One of the things that, because the $half and whole dollars are so significant, what we sometimes will have happen is a stock will flush, and sometimes it'll bounce off the $half or whole dollar and go up. Sometimes it breaks through it and then immediately reclaims it. When we're trading the long side, if we trade a stock that breaks over a whole dollar, then immediately gets below it, We don't usually love that, you know, and it happens that it'll go from, you know, 795 to 805 and then go back to 770. So that's kind of the spot where a short seller is going to say, I'm going to go short as it's breaking back below at 8 or 795. Stop is the high. So when we do that inverse, it breaks below. The second it starts to look like it's curling back up, that can be the long for the break back above that level. And as long as it holds above it, I'm okay. But if it goes right back below it to the lows, usually I'd cut my loss. So it's a little aggressive, certainly, to trade these around half dollars and whole dollars in that way, but it certainly can work. All right, so that's SNDX. So let's see, we've got 2, 4, 6, 8 more examples. So why don't we pause the live class here? I'll just pause the recording and then we'll resume it well, you won't even know. We're gonna just go, we're back. Okay, just like that. So we're gonna pick back up here with ACY. So another dip trade. This was a stock that made some pretty big moves. So let's see where these opportunities are. So out of a halt, then drop. Okay, so ACY currently halted. This is, you can see right here, NNDM also going into a halt. But let's watch ACY. Okay, so I don't have the chart up on it. Looks like I was watching NNDM. So ACY, I'm long at 344, but it's hard to really understand the context here without the chart. So let's just see what this does. Maybe the level 2 will explain something to us. So a quick break for the break of the whole dollar, taking some profit off in that level. You know, this is a trick. Okay, so there we go. So now we've got, okay. All right, so that gives us the context. Okay, so let's pause this. So stock here, now, you know, what we didn't know at the time was that ACY, the same stock, would end up making that crazy move to $38 6 months later. But on this particular day, it was popping up. Float was pretty low. 200 moving average was a little bit of an issue at $4.59 there. But the trade was along for this opening range breakout. This is a little 1-minute opening range breakout actually on this one. It halts going up. And then let's see, I guess the question is, are we going to get a dip trade on this for another squeeze higher? Watching, there's a 48,000 share seller at 93. The previous halt was right about here at 344. So we're kind of coming around 350. So in this case, I buy the dip at 338 and take it right off the table. So that was a very quick dip trade, a 3-second long dip trade at 338 to 365. Let's see if I get another one. So that was a little bit of a panic sell-off from all the way up to over $4 down to 338. So down to 317, all the way to the halt level down at 310. This one's not as easy as some of the others, but a quick trade here long, tried to do 6,000 shares, stop would be 310 right around the halt level. I got a partial fill, canceled the rest. It does pop up to 65. That's a 20 cent, just about 20, 30 cents. Take it off the table, still churning. But a red candle there on resumption. So kind of a tricky one. I don't know, is there gonna be another trade on it? Now maybe over 65. But no, it doesn't look like I get one, at least in this video. So kind of a, I don't know, not as clean of a dip trade on that one, but let's see. So let me pull up the next one. Okay, so we've got, this is a gap and go. Dip trades on Gapper, EC. Okay, so let's see what this one has for us. Okay, so here's the bell. This is light volume coming into the open. So there, this is interesting. So light volume coming into the open. It's up 67%. And you can see that it has price action pre-market. It's just light volume, but it does have some price action. So the pre-market high is about 450. The volume weighted average price is down here around 385. And what we sometimes have happen at the open is actually very similar to what we have on a resumption from a halt, which is a quick dip and then a rip. The dip is often traders that may have had orders to take profit that execute as soon as the bell rings. So we kind of get that momentary dip and then the rip. So watch here. So I see some sell orders going through at 95, 94, and I try to punch the buy button there at 4. I actually fill at 412, 413. That's not a very good fill. 410. I'm in 8,000 shares, a little higher than I thought. So I'm trying to buy that dip. There's 415. There's 430. There's 440. 450. And now we're back to our pre-market highs. My Lightspeed charts, or my e-signal charts, haven't even updated yet. That's not bad though. So that's a quick dip and then a rip. So dip there, looking for the gap and go trade. Bounce off the VWAP, squeeze through the pre-market high. Over 450, I could add, and I do add there for the break of the $0.50, and then as soon as it breaks that level, I want to take a little off the table. Okay, 48, 58, 70, 61, 68. I take half off the table at 60, a little more. Now, halt level going up is 76, 476. There's 475, 476, and is it going to pin at that level? So we've got one bid there, so this could be a false halt. Okay, now it's stacked. So right now it's thinning out a little bit. Some people are selling, and then it sort of loads back up. So it's looking stacked. I think we've got only a few seconds left till it halts. It looks like it's definitely going to halt. Now, short of maybe someone punching a huge sell order, it's probably going to halt here. And this is a confirmed halt. So now, while it's halted, we're seeing the prices jumping around, beginning to show us possible resumptions. $5, 477, 476, 480. Kind of weird order just went through there, but I wouldn't worry about that. So 485, 561, right? So now we've got this. Okay, so here's resumption. So can we do a dip and a rip on this again? All right, so yes, and usually the dips are along with hotkeys, typically, but in this particular case, at the open, I already had the order ready to go. And in this case, I actually put the order at 680, which is really high. So watching here for a quick dip and then a rip over 5. Here we go. There's green. See that green on the tape? That's what triggered me to press the buy button. So now I've added 460 as my average. Looking for the dip. We got the dip. Now we're looking for the rip. Okay, hidden seller there. There's a hidden seller at 490. You can see it on the level 2. It's not breaking. There we go. 95, 97, $5, 18,000 shares. I could add more here. Added more there. I'm up to 9,000 shares, 471 average. Now, if you were just taking the trade on this for the break of the $0.50 or the whole dollar, you might be in at 95. And that would be fine. It would be a quick breakout. You'd want to see pretty much a break here and take profit a little bit maybe for 505. I, of course, had an earlier position from the dip on the VWAP at the open. And then right on that resumption from the halt, we saw that little sign of red, and that gave me the opportunity to add. So let's watch this again for resumption. So I fast forwarded this video for you. So here we go. So we're coming into resumption. We're showing 480, which is only a 4-cent gap up. So it's not a big gap up on this resumption. So watching it. $5. There's 485, 488 green, 94. Now, aggressively, sometimes on a resumption, it just squeezes right up and it doesn't dip. And if that's the case, then the places I would be adding would be around $0.50 and whole dollars. But in this case, I'm still holding my core position and I'm waiting for that dip. The dip can be a little profit taking from people that maybe were in, that want to take profit, whatever. So let it dip, let that red go through. And then as I start to see green, there I'm seeing some green. Buy the dip. Now if I'm in here at 77, 78, 80, stop logically is the $0.50 of 450. So it's about a 30-cent stop on the add. Of course, these usually work well, so confidence is pretty high. So getting filled at 86, 89, and 89. Adding more here. That seller is big, but not huge. So I go ahead and add, thinking that this is a gap and go stock. It's clearly strong. It's above the 200. We've got a catalyst. You know, it all kind of works and looks good. There's 510. So now I have to make a decision. Do I sell half? The next halt level is 582. So it's a ways away. Doesn't look like it's about to halt again right here. So this may be a good place to sell half. Let's see what it does. I put out the order to sell half on the ask at 509. I don't get any filled, and now it's coming back down. Back all the way quick. So that's that quick rejection of a whole dollar. And if it breaks the $0.50, so right here, it seems like it's holding the $0.50. I wasn't quick enough to sell. I got a partial exit at 499, and I'm still holding 6,800 shares. So I added down there at 48.50. Essentially what I did there was I added right at the $0.50. It did break it, and I didn't think it was going to. I thought it was going to hold. So it did break it, but then it came right back above it. New cost basis 466. Now, I looked to take some profit or take some out into that pop, which is basically at break even. So that's an average down type of trade where I added on that dip to reduce my cost basis. But boy, this thing is just going lower. Looking for another dip on it off of $4 support, checking my P&L. I don't want to go red on it if I can help that. But it's clearly not looking that great. So still holding 3,200 shares. And now the daily is looking like a topping tail. The 5-minute doesn't look good. And it's just, this isn't looking like a really great setup right here. So let's see. It looks like I do add more right around this area. This is a little aggressive. I don't think that this is really a great dip trade. And I take a little off as it comes back up. This isn't really a great dip trade because it's not that panic flush. It's below the VWAP. It's clearly showing some weakness. It's essentially mitigating. This is essentially averaging down on these dips just to mitigate the loss. Hertz, yeah, I don't think that's not a dip trade stock. EC. So, if it can get back over the volume weighted average price right here, maybe we have something we can work with, maybe, but kind of unlikely. And it looks like it taps the volume weighted average price and flushes lower. And so where do I finish? I'm not sure where I finished in my P&L on it, but it didn't end up sustaining. So that's that reminder. When they come back up, let's look at that break of 5. Because right there, I had an opportunity to take out profit, and I didn't catch it. So this is why you got to be quick. And if you don't take that profit, it's gone. So there's the hidden seller at 90. Now, sometimes a hidden seller like that could be indicating that some people are either trying to short or sell big positions. This was a fine dip trade, though. Nothing wrong with that. It was a good dip trade. Little seller at 90, but it does break through that. Okay, that's fine. 18,000 share seller, no big deal. As soon as it breaks, we see red at 505. And then right there, all the way back down to 485, 15 cents off that level. That's not great. I should have just hit the bid. Oh, and look at how quick it flushes there. So then a quick dip off that low, but that's a rejection of the $0.50. That's what that is. It rejected the $0.50 breakout. So this is actually a good one for me just to note, and I'm just going to make a note on this slide. So this is a dramatic rejection of a $0.50 breakout. And I'm actually going to copy this slide 845 to half and whole dollar chapter, just as a reminder of the risk with that setup. Okay, so let's look at another one here. It looks like dip trade off the $0.50. Is this not the same? Hold on, let me just look at this real quick. So this says it's EC, and it's a dip trade off the $0.50. Okay, so at this point, it looks like this is a double bottom down here, at 366. It's bottom fishing because it's not a strong stock, but maybe at the time this was the best thing we had on that day, which honestly is maybe just a reason to not trade. But we did get that bottom, that base off of the whole dollar. So a quick flush there. So let's watch this. So this was the support. It's a flat bottom, 66. And I'm kind of watching it for a dip trade. It's kind of, I don't know exactly what you'd call it. But watch, there's some red. So here's the red. I'm looking to scoop up. If it can't, number one, if it tries to break this level here of the $0.50, of the 66 and fails, that could be a reversal. Here it breaks 66, but then basically bounces right off the $0.50. So I jump in at 66, stop is 50, that's a 16-cent stop. That's not bad. Now looking for a quick reversal back up. This is not a setup that you'll see me trade a lot. It's a pretty weak setup, but on this one made the most of what we had. So a small winner there, back up into the 80s, and I don't know how much higher it went. Okay, so that's a quick little dip trade, not picture perfect. Here's another dip trade. Let's see, close that one. All right, so back to ABIO. How many times have we looked at this stock? So now I'm not sure if this is one that we've already looked at or feels so familiar. So, okay, well, let's see. What was the dip trade there? So burst of red, as you can see, flushes down, and I start doing a dip here off of this 1250 sort of psychological level. That's the spot that I'm thinking is my bounce. So I'm starting here, 1278. High is 1350. So this could be the beginning of a 1 minute micro pull or a 1 minute pullback, because we've got pullback, pullback, pullback candle. First candle to make a new high, then a move back up to 1350. If I have a dip trade here at 78, that's a good starter on that type of position. So let's see what it does. 6,000 shares, now over 13, adding there to 8,000. Okay, there we go. What's the high of the last candle? Looks like about 13.15. There's 12.95. Orders at 13.25. Green on the tape, good. That's what we like to see. There we go, nice, up to 10,000 shares. So now into the first 1 minute candle to make a new high, I have 10,000 shares. The 1 minute candle just made the new high right there, just by like a penny. Target's 13.50. So into this level, now I already have a profit cushion of 20 cents, 30 cents. So now we're going to get continuation, because now I've sized up on it. It's a higher price stock. It's dipping back down. Is it going to hold 13? 13 should now be psychological support. New order, moving it up towards, so this is, I don't usually do this, but in this case, I put out a couple profit target orders, 13, 36, and 46, just manually entering them so they're ready to go. So if it does a quick rip up, it'll pop those orders out and give me some profit. I don't often do that. You've seen in most of my videos, this might be the first time you've seen me do that. Maybe I've done it one other time, but usually I don't. So I end up canceling them and then just putting the order at 26 there to take a little bit out. I think I'm a little nervous on this, that I might be in with too many shares and that it could do another big flush, and that it kind of should have gone already, and maybe now it's going to do more of an ABCD pattern, which is fine, but I can't hold, look at that, back to break even, right? So now I'm trying to, can I get back out? So now I'm getting back out as it pops back up. And in this case, I don't really want to wait, because the 5 minutes not set up yet. The 5 minute could go for another several minutes, 20 minutes of consolidation. I don't want to hold through all of that. That's exposure time. So I just reduce the risk on it and, whatever. So 31,000 on the day, though. Can't complain about that. All right, so let's look at the next one. Okay, so this one is a 9,000 share dip trade. Okay, so a little bit bigger size here on this. Okay, let's see. So this one, I think we might have looked at already. It starts at minute 14, so let's jump forward. If this was on SLS, I think we might have noticed it or looked at it yesterday, but let's just see. Okay, so SLS is ripping higher. Why is it doing that? Come on. Let's make this full screen, or higher quality. Hits a high of 17. Oh my goodness, I'm long on 15,000 shares at 1689. That seems aggressive. We're right at the top. That's not well positioned. Now, if the halt level moves up, so I cut the loss on that. That was not a great trade. That was way too much size for that high up. It looks like this is a day where I've had a little bit of a roller coaster. Sometimes days like this where I get caught on a couple of big losses, sometimes it takes kind of getting knocked down hard to sort of have the aggression to get back up and be aggressive. So I'm clearly being really aggressive today, probably recouping losses. Max loss was minus 30,000. I never went below it, but trying to get myself back to a respectable place on the day. So all of a sudden we get that quick sort of panic flush there off of 17. So I was looking for that squeeze to 17 and added aggressively there. That was not a smart move. So I hit the bid right about there, maybe lose 1,500 on it. And then all of a sudden, we get this flush back down to 1,540. There's the panic. Look at that, 1,520. So that's where you're looking at a candle and it's just straight down. So into that, I buy 9,000 shares at 1,550, right? So that was a quick panic sell-off. I'm doing the dip trade on it, holding for a second, taking a little off the table. It's not a huge winner, but I was sized up a little aggressively. When I size up aggressively, then that usually forces me to sell too soon than if I just been more conservative. So sometimes that big share size can create some slightly more erratic trading. Looking for the first candle to make a new high right here. First 1 minute candle to make a new high, then a move back up to 16.17. But I think we glanced at this one while we were looking at another trade the other day. Yeah, maybe yesterday or the day before. So anyways, I won't get too far into that one. Okay, so next one down here, SNOA. All right, let's see about this one. So this is a dip off the volume weighted average price. Okay, so SNOA also in that, $15, $16 range. These ones can be good for dip trades because their range is bigger. You can see the volume weighted average price is right around $15.79. Watch here. Orders for 500 shares instead of 5,000, reducing that a little bit, quite a little bit. Will we get that panic? Yes, right there. Panic selling. Marketing, that's like marketing out. Just flush. And there, I'm stepping in to buy the dip. 500 shares. Compared to the other one with 9,000, I'm being super conservative on this one here. Sometimes, for whatever reason, it's flip of the coin how aggressive I'm going to be on from day to day. But anyway, so taking some off the table there. That could have been a $5,000 winner, but with only 1,000 shares, it's only a couple $100. So I don't know where I sit on the day. I see the green plus sign, so I'm green on the day. But, I might not be up all that much. I might not feel that I have a cushion. Maybe haven't had a big loss to get me kind of really trying to go super aggressive on it. So, yep, so that was a little dip trade off the volume weighted average price. Not bad. Okay, so looking at that technical support level. And now here's another one. Let's see what we've got on this. Another bounce off the volume weighted average price coming out of a halt. Okay, so let's see, what do we have here? So CHK is halted, and the bounce spot that we're going to be looking at is 42.23, the volume weighted average price. It halted down at 43.61, and we're showing 43.20 by 43.75, which seems okay. Not a big gap down. Time, 11:57. Last print was, 10:11:57 was 10:06:58, so we should be coming up to resumption in just a second. Watching. There we go. And it opens low. Immediate flush at the open. Down to 41. I already had it in my mind that I was going to buy the bounce off the VWAP. So down here, 42 is a dip trade. There's 42.90, 43. 43.63 is halt going back up. Lighter volume, up 70%. You can see the volume is kind of, it's kind of just moving a little slower here. $42. So I added a little bit there for the pop over 43. Halt level's 44. There's 43, taking a little off the table. It's not a big winner, but it is a bounce off that volume weighted average price. So that's the level that I was watching. And then ultimately the exact entry was at the whole dollar at 42. So I'm not sure that I even saw, well, no, it looks like there's a little bit of green there. A little bit of green. Yeah, so I saw a little bit of green there at 42. You got a big spread, 75 cents. But, of course, with small size of 250 shares, I wasn't super worried about that. But about a $1 a share stop on something like this. Below 41, I'd have to cut it. So about a $1, $2 a share profit target. Potentially, could it go back to the high? Potentially, it could. All right, we've got one more here. So let's look at this one. Okay, so here we have another, oops. There we go. So this is another scenario here where we got a sell-off and a bounce dip right off the volume weighted average price. So it looks like we were halted down. We resumed. Maybe it didn't halt. Whole dollar, 22. So long at 21.98 for the break of 22. There's 22.20. Whoa. Okay, it's one of these stocks. Sometimes you have stocks like this that all of a sudden you're seeing 2220, then 2280, then 2380, 2480. These are ones that sometimes just, whoa, these can move fast. I'm in at 2205. Big spread. Big spread. Now red on the bid. Look at that. So initially a little pop there. Can it get over 23? So with a stock like this, I'm going to be inclined certainly to sell on the ask because we've got such a big spread. And I want to see if we can get it over 23. First 5-minute candle to make a new high could be a setup, but we still have 3.5 minutes left before that is going to work on the 5-minute. Went ahead and added there. Sometimes stocks like this that have big spreads, they can be big winners. They can be big losers too, but when it works and they go the right way, you can get a nice move. Target or retest to the high. The 5-minute is starting to form, but I'm a little early. And so the question is, over the next 3 minutes, can I hold this without getting stopped out? If it consolidates right here under 23, then we could get a trade, and it might work, but we still have 2.5 minutes left till this 5-minute is set up for us. So there's 22.55 on the bid, and I don't know if I'm going to be able to hold it. I don't know if I'm going to be able to wait for the 5-minute pattern to form. Even though I would have a great entry for the 5-minute pattern, if I get stopped out, I get stopped out. And I've got 4,000 shares, so that's bigger size. So this is a stock also at all-time highs, which is an important thing to note. So can we get over 23? So I have an order there to take a little off the table in case to reduce my risk on the break through 23. So we've got 2280 by 2290. Can it break through that level? We still have 2 minutes left on the current 5-minute candle. You can see that it's lighter on volume. Not doing it. It could, but now I'm trying to reduce my risk a little bit and sort of capture some profit in this area. But it's hard to really sell on the ask because there's not a lot of volume. Hitting the bid, I'm going to get slippage. I don't see big orders on the bid either. If I saw a 10,000 share order on the bid, then I could hit the bid and get filled. But there's not a big order on the bid. I only have 3,900 shares, and there's 1,100 on the bid at 70. So there's 2290. So I put out a couple profit target orders thinking that if we get this set up here, we could get a nice snap. Now, at this point, we only have a minute left on the current 5-minute candle. Starting to look a little bit better. This is a flat top. This is a sort of little 1-minute micro pullback here at 23. But it is having a hard time breaking it. And, one kind of whoosh of selling, and it's going to go right back down to the lows. Girl, go lay down. So there's the buying there, but it's not breaking that level. There's a seller there. We've only got 30 seconds left on the 5-minute candle. Come on. This can do it, right? Go lay down, girl. How'd you do? So there's 23, and there we go. Uh-oh, seeing some red. Now this is where people start to bail out. Uh-oh, I better just cut my losses. And if you're not the first one to the door, you'll be the last one to the door. There's 60, there's 56. Okay, so now, but this 5-minute chart is clean. This is a good-looking 5-minute chart. The volume profile, not great at the open, but good in that candle, light volume pullback. We just need the first candle to make a new high. I would say the issue with this is there's just not a lot of interest. It's only up 10%. It may not be the leading, gap. Well, we've got this AYRO over here with 63 million shares and up 64%. That's probably the one more people are focusing on. This one's just not getting the attention it needs to give us that big breakout. So, and just like that, comes back down, and I got to cut my loss. So, that's a reminder. Is this the right stock to trade? And in that case, I don't think it was really the right stock to be trading at that moment, unfortunately. Okay, so with that, we have come to the end of this chapter, I was going to say, but I have some live examples from today that I was going to show you. So let's get those up. Let's see. So we've got OBS. Okay, so all right. So these are some trades from today. Okay, so let's see. Oops, hang on. All right, so there we go. So VCNX, so it's 851, looks like about 851 here. I think I may have already had, no, okay, so there was one trade there. Was that a dip trade? No, so this was actually, this was a micro pullback on a break through the volume weight average price, right? So you guys recognize this, I'm sure. Let's see, I'll make my video a little bit bigger here. I'm just gonna go like that. Okay. So the high of this candle is 490, the high of this candle right here. So watch right here. See that? Look at that. Now this already has 7 million shares of volume. So let's back that up just for 1 second. So it's right here. It's 82, 84. This candle has 8 seconds left on it. Now this stock is easy to borrow, but it still made a really big move today. That candle has now closed, red. Micro pullback right underneath the volume weight average price. It's not a dip trade, not yet. There will be some. All right, so I take the long there, looking for the squeeze back through 5. Now, at this moment, this was the leading, I believe it was the leading gapper in the entire market. If it wasn't the leader, it was the second leader. But it was the leader, and it looked the best. It was getting back over the volume weight average price. We had a pre-market high of 6. So mentally, I was thinking that's a possible target, a retest of 6. We did have a news headline, which is good. We're above the 200. And the float on is like 6 million shares. So it's not crazy low, but it's pretty low. All right, so 7 million shares, actually. So I'm holding right here. And into that break, I don't actually take the profit. Now, on another day, I might. But in this case, I said, no, I think if this holds above the VWAP and it holds above 5, we might have some more room. So I'm holding here. It breaks over 5. It's back below 5, but it's holding $5. And hey, there's 20,000 share bid there at 505. There's 510. There's 511. Seems like a little bit of a seller there at 511, maybe. Back to 10. 20,000 share bid still there. 5. Dips down for a second, right back above it. So what we know about these stocks is when they break the $0.50 and a critical level like this, but especially at the $0.50, we want to see it break 510. It pulls back, holds support at 5, but then we're looking for the break over 510, then up to 515, 520. Seller at 11. We've got a hidden seller there. So now I've got to go in. I increase my max size, which was at 12,000. So increasing that to 50,000. Adding right there at 12. Now I've got 14,000 shares. Cost basis is 97. Still holding. Haven't sold any yet. Letting it dip down. Now this may do a dip on the volume weight average price and then a breakout here, proving it can hold above it. And that's okay if it wants to do that. So I'm now looking for the break of 511, 512. And into that break, I'll probably want to take some off the table. There's 511. Seller, still there on ARCA. Huh. All right, well, let's see what it can do. There's 12. It's not breaking it yet. So this is, my eye is right here. Back to break even. Still, though, above the volume weight average price and still holding the high of that recent level. Adding there, cost basis is now 99. Let's back that up for 1 second. So I'm looking at this 10-second chart, this right here, a little dip. Adding a little bit more there, looking for the breakthrough 11. There's 11, there's 15. Now taking some off the table into that breakout. So took some profit off at 15, which is good. Sizing back down to 99, to 625 shares. I'm going to let it dip, and I'm going to look for a dip back off of the VWAP. VWAP is 94. Looking for a dip off volume weight average price. Watching. $94 is the VWAP. There we go. Looking for a dip trade here. Long, dip, bounce off the VWAP. 95, 6,000 shares. Looking for the pop back up over 5. Taking some out. This is a cheaper stock, so we're working with a smaller range. 5 cents, 10 cents. But I can trade with bigger size. Now another dip off the VWAP, potentially. No, sold the rest at 90, stopped out. It's back below the volume weight average price. And now this candle right here at the moment on the 5, well, it's a green topping tail and a false break of the VWAP. Let's watch it. What you're going to see is all of a sudden it rips right back up. And I was kind of surprised. There's 90, 93, 94. And I was watching this, and I was looking at the first 1 minute candle to make a new high right through here. And I thought, if this can get back above the volume weight average price, if this can break back over 5, we might have an opportunity here. Now, this could be, in a way, a first 1 minute candle to make a new high. It's also a little bit of a dip trade relative to the high of 518, but it's not buying into a panic flush. It's kind of basing out, and as it starts to curl back up. So watch this here. 9 million shares of volume. There we go. So we're starting to see green. I'm back in. 12,000 shares. First candle to make a new high on the 1 minute right here. Look at this. Now we're timing the first 1 minute candle to make a new high. I know it's small. I don't know how to make it because I have so much stuff I'm looking at. Added there, 18,000 shares, taking a little off the table, 10 cents. Added a little bit more there. I don't know why I did that, but maybe I sort of was like, get out, and then, hey, wait a second, 17's right there, go for that. So sort of trading around this level. It's got to break through 17. This candle on the 5 minute has 30 seconds left and is now looking green, very green with a big green candle. Much better. Adding back now. Can we get the break of 515, 520? So it dips back down again, sitting up 10,000. And then all of a sudden, I look away. I mean, it happened so quick. Just watch this. Just back this up. And I missed it. All of a sudden, this thing goes right back to the high. And I was like, it's back below the VWAP. This wasn't really a super logical setup here, so I didn't think a lot of it. Look at that. So, that break back over the volume weight average price, maybe it was just that it squeezed out some short sellers. So that was the first 1 minute candle to make a new high right there. It did a false breakout. It broke the highs, then back below VWAP, and then all of a sudden right here, and note the volume is actually lighter, but it's going. So now it's 25, 27, 28. Added there, high a day entry. It's a little risky. That's a little risky. At that point, I'm just kind of jumping in at the high a day. It's certainly not a dip trade. I'm just buying at the high a day. And my thought is that it's squeezing out people that might have been shorting around the VWAP, and let's just try to ride the momentum. So it's a little bit of a high entry here. New orders in the 50s. So I don't think we're going to get another dip trade on it for a little bit. So let's zoom a little forward. Look for the next dip trade. Looks like we might have had one right back here just for a second. So here, just back this up real quick. So here we get a little bit of a panic sell. The high was 560, and then we get this flush right here. And I did a dip trade here at 34. I'll take it off the table. Only 5 cents, but 200 bucks. Not bad. Okay, so let's see the next one here. So I just did another dip trade. Back this up. So it dips again right in here, and I do another dip where I try to pick up those shares off the low. So again, into that kind of red flush. I think this is about where I do the next trade. I'm still thinking, because we've had a really good week, because the market has been really hot, because this is the leading gapper, I'm thinking it's gonna trade well. And look at that. That was nice. Just like that, I'm in at 29, out at 40, 13 cents. Now, this is not the big dramatic dip trades of, the $15, $16 stocks. These are smaller ones. But I can also trade this with bigger size. We've got quite a lot of volume, fairly tight spread. So I'm in at 28. There's 34, 35, 37, 42. Nice. Take half off the table. Why not? Sold half and another half. So sold half of 4,000, that was 2,000 out. Sold half of 2,000, that was 1,000 out. So those two orders are both Control X, or Control K or L, depending on bid or ask. But okay, so now we're looking for the 1 minute pullback here and a break back over 50. If we get the break of 50, we'll look for a move up to 60. So 55, kind of choppy in this area. Let's see. So a little false breakout. We'll see if I get another dip trade. Coming back down here towards the volume weighted average price. Now the 5 minute is beginning to form a 5 minute bull flag. So this may be a little too premature to take a trade. So right through here, I just kind of let it keep trading. I'm not actively trading it. I'm just kind of watching it. Watching it very closely, of course. No trades through here. So I haven't taken any trades on it in about 5 minutes. The volume is continuing. 5.5 million shares coming up to 6. 15.5 coming up to 6. And then all of a sudden, like that, look at this. Just rips right back up. Ah, shoot. Kind of missed my trade there. So just did a quick high-a-day break on it. Missed the dip. I missed the good dip on it. So let's zoom this a little bit further forward. Let's see, was that a dip trade long? Or was that a high-day break trade? So the high is 75. And looks like this is a high-day break trade. So doing a break of high-a-day. Orders at 83, looking for the squeeze up to 6. Yes, that's a high-day break trade, which is fine. There's 75, there's 80, up to 47,000 shares, up to 50,000 shares. Okay, so now I'm being aggressive, looking for the break of 6, scaled down a little bit at 88. Didn't really end up getting that break of 6 there on that first try. Now we're pulling back a little bit. Looks like that was a dip trade. So it flushes down for a second right here. Watch here for a dip at 70. It'll be a shift 1 hotkey. Nope, not quite yet. $75 on the bid. There it goes. A little bit of green started to come in there. Jumped in, small size, just testing the water. But can I start? Here's the thing. Can I start to get sized up for that breakthrough 6? Because this was what I showed you the chart of earlier. So now I've got starter at 570. Now we know the apex line here is $6, but I'm in 30 cents under that. So now can I keep adding so that when we get that break, we get that surge? We do have a little bit of a double top risk here, and this formation is creating the handle on that cup. So this is kind of the cup, but then really it's a double top. So I'm holding, oh, looks like I sold at 79. So let it dip down again. Orders at 6. So there's 90. And I said here to myself, you know what? We still have 2.5 minutes left on this 5 minute candle, which is red. I don't think I can get in just yet. I think I have to wait just a little bit longer. So let's see. So this is what we're forming right here, this little pullback. So it's beginning a 5 minute bull flag, and over here we're in a little bit of, kind of chop, a little false breakout there. So now as it's dipping down, can I potentially get another dip trade on this? So let's see what we get. Starting to base out a little bit there. So I'm going to fast forward this just a little bit. I want to get us a little closer. Oops, so I've already started, so let me back this up. So right in this area, looks like I'm starting to accumulate a position kind of on this dip right here. So I'm going to start accumulating right in here. Stop is down here. It's a little bit of a dip relative to the 5-minute. Again, it's not a flush, but I'm kind of dipping my toe in the water here, accumulating in the 70s. This 5-minute candle still has about a minute left on it, so we're not quite ready for the 5-minute breakout. Now, sometimes they go, and if this does go, it's a premature 5-minute breakout. I could still make money on it, but it's not going to be as strong as if it really does the proper pullback in weights. So letting it pull back. Now you can tell in this scenario, I'm holding 8,000 shares, and I don't care that I'm break even or red. I'm already up 10,000 on the day. So at this point, sure, I don't want to lose too much on it, but I can give it a little bit of room to see if this becomes a bigger trade. So now I added another 4,000. I'm up to 12,000 shares. Trying to time that breakthrough 6. So hand is on the buy button. We've got two mice here. And again, a little dip back down to 70, but it bounces off that level. Now, okay, now I'm sizing up. Now we're clear for the 5-minute breakout. Notice we're kind of ascending just a little bit here, these 3 green candles. So I added 81, 82, 83. I'm looking for 88, 86, 87, 88. Okay, here we go. Our high a day was 95. Here we go, adding 36,000 shares. My cost basis is 583. So what started initially as kind of a dip trade, now I'm adding into the confirmation for the break. Now, you would be perfectly fine as a beginner trader saying, I'm going to buy here at 95 and I'm going to sell at 605. If that was your entry, 95, first 5-minute candle to make a new high, anticipating the break through the high, that would be fine. Target 605, stop is 89. So let's pretend you did that. There you go, there's 6. There's 605, you're out of the trade. Now, we're selling at about the same spot, 606. But I had a little bit of a better entry because I started with that dip trade. So now it broke 6. I take a little profit. Now remember that example of that other trade where it went to 505 or whatever it was and then 405 and then dropped. Instead, on this one, I go ahead and hold it. Now this was the leading gapper with volume, 22 million shares, up 100%. This felt like the one today. It was the obvious stock today. So there's 605. So now I'm adding here. That's basically a quick dip because it broke through 6. So let's watch the break here. As volume starts to come in, I'm going to add to anticipate the breakout through 6. So 12,000 shares now at 74. Yes, I could just sell it at 94 and lock up 2,400 bucks. Instead, I size up. So there we go, sizing up 83. Now, if we see 85, next target's 90. If we break 90, 95, just in sort of 5-cent increments here on a stock of this price range. There's 95, there's 6, there's 609. Clears right through that level. I throw out an order, 606 on the ask to sell half, 18,000 shares. I don't get very much filled, and so I hit the bid at $6, it looks like, and I do fill more at 6 just to pay myself just in case. Then new order, 610, 615. Now, it's holding 6. It broke it. It dipped down for a second. Now it's coming back up, adding here 605, break of 610, looking for 615. This is where it's going to start to pick up a little bit. Now my cost basis is 592. I'm adding more there, 610. Taking a little off the table, 608. I'm going to be actively and quickly trading this within this range. Taking a little more off the table. Next spot is 615. It pulls back a little bit here. It dips down. I'm going to buy the dip. I'm looking to buy the dip on this. I bought the dip there, 82. I'm looking for the break back over 6. 82, 12,000 shares. We got that kind of panic dip. It's sideways and then a little bit of green, so I start to buy up that dip. Looking for the pop back over 6, high day 615. Now remember last time, it broke 5 and then ripped back up, and I'm saying I'm not going to miss that this time. This time, I'm going to be in it for that move. So now I'm saying this stock sometimes fakes people out, including me. I'm going to try to make back what I lost on it, or what I missed on it. So I'm doing well on it here. There's 615. We're coming back to the double top high a day. I'm at it at 604 long for the break through the high. Sized up 615. Now I want to see it break 615 and go to 620. There's 17. Stalling out there a little bit. There's 18. There's 20 for a second. Back in here. It needs to break through 620. There's 20. It's struggling there. There's a seller in the way. Now we know that these can have resistance around half dollars and whole dollars, but also at quarters. So 20 and 25 is a potential resistance spot. So unwinding the position, break even, it's pulling back. It's a little extended on the 5-minute. I do jump back in when I see that sign of volume on the tape. Back up to 22, 25, good, 27. Adding here into the break higher, looking for the 30s. If we can break over 30, then we're looking at a move up to 650. This one's starting to pick up a little bit more. So I'm in at 21, looking for 35, there's 30. And on that one, it looks like I stop out 25 and 20. Now this keeps going as we get further into the day. So let's look for the next trade on this. So taking a little bit of a break, here comes the open. Look at this. Okay, so let's back this up. So what we know is the second the market opens, we have that momentary imbalance, right? Where right now the bell is rung, it's 9:30 and 3 seconds, but we're not seeing anything. And then all of a sudden we sort of see a stagger of orders. Now, sometimes this is actually a data issue where the data is just kind of a little lagged because it's sort of a bottleneck right at the open. It's just all of a sudden, all this data. So here I see it squeezing up and I put out buy orders. They don't get filled. It pops up here to a high of about 35, and then I'm looking for a dip and a rip. Watching, orders at 650, bought the dip at 23. Looking now for the rip through 30. There's 35, break of 40, break of 50, half dollar. Half dollar needs to break. Open is so volatile. Oh no, I'm adding at 38, 37 average, 38,000 shares. It's not breaking the half dollar. Order out, 3 cents below the ask at 47. I fill nothing and I start hitting the bid. So I size down, probably a small loss on that trade. I let it pull back, and now I'm looking for a dip. I'm still bullish on it, and I know that it sometimes drops like this and then surges back up because we've already seen it pre-market. Adding there at 618. If it can get over 650, we're in good shape. Stopped out at 6, took the loss. Willing to get back in if it can reclaim $6. Bought the dip there, break back over 6. Watching. There's 605, 606, 613. Thank you. There we go. So adding 634. Now, this time, we want to see it break 650. 40,000 shares long, 622. Here we go. 48,000 shares long. We've got 33 million shares of volume. I try to add more, max size. I can't add any more. So I have, right now, 50,000 shares long at 627. I'm up 10,000 bucks. I'm looking for the break of 650. An immediate break, take half off the table. There we go, there's 60. I take half off the table. I got filled at 54 and 51. Sizing back down. It hits 60 and then pulls back. So size back down on it. Now looking for a dip for another trade. Watching that 60 spot. So I'm really in the zone on this stock. Orders at 64. Psychological support is at 6. So watch here. Got a little trade at 46 for the break back over 60. There's 65, there's 70. Taking some out into that breakout. Now if we can get over 675, we might have a shot at $7. So now putting the order at 7. Here we go. Adding, looking now for the squeeze through 7. It's starting to pull away. Volume increasing. There we go. That's a nice trade. We got the move up to 7. Let's back that up. So we know that for, 660 was kind of that, it was the high a day. So right here could have been a dip right there long in the 30s. Orders at 64, I can press it right now and I'll get filled at the current price. So filling at 37. Trying to anticipate this, curling, 10-second chart, sort of showing like a little bit of a bull flag here. Looking for that squeeze back up over 45, 50. There's 50. I try to take a little out. I'm not sure if it's going to break. Size back down. Now back over 60. If we can break that half dollar, we struggled with it already a bit, so I'm a little cautious. Here we go. Added back for the break of the half dollar. 20,000 shares at 46. There's 58. Can we break 60? Double top. We've got risk of a double top. I sell at 56, half. Now let's see what it does. New order at 70, moving it up just a little bit. Still holding at 46. There we go. Adding right there, 60, 60, and 65. The added 65 was 5 cents higher than I would have probably preferred, but my order's at 70, so I'll fill no higher than 70. So there's 70. I tried to take some off because I added a little high. I'm in at 56. Of course, if we break over 75. Now, into those quick pops, I'm pressing my hotkey to sell half, either on the ask or to sell on the bid, depending. All of these I've tried to sell the ask first, and if I don't get filled, I'll hit the bid. So holding 12,000 shares at 56. Now looking for 75, because if 75 breaks, that's that psychological level where now we're starting to ascend up to that next spot, the whole dollar. Now I'm adding. Now I'm starting to get aggressive. If I was short, I would be panicking. So I'm expecting short covering on the squeeze here as it's just going strong. So I'm now 32,000 shares at 77. Adding high, looking to add again for the breakthrough 7. Adding there, 42,000 shares, 7 on the ask, rips through, 705, taking half off the table, no problem getting filled. New order, what's the high? So this has to hold 7. If it can hold 7, I could do a quick dip for a long over 710. Watch. Here we go. Long, right there, added. Now this is a high fill. So this, let's go back 10 seconds. So, oh, was that 10 seconds? Well, anyways. So right here, I punch it for the break back over 7 right there, and I'm filling 703, 06, and 10. So I'm filling a little high. I think that's a little high. In fact, I think that's my order there, filling above the ask. Not really sure why that would be the case, but in any case, it's just it's a fast-moving stock. It's going to happen. There'll be some times where the fills are a little generous, and sometimes where you feel like, oh man, really? But it's fine. Okay, so adding more there, trying to look for that squeeze up a little bit higher. So we're at 725. Now we squeeze up to 745, 760. Did I get a dip trade here? I don't think I'm getting a lot of trades in this area. Okay, so now we're getting a little pullback, and it looks like I might have bought the dip. I might have bought the dip a little early there at 726. So it does dip a little more on me down to 7. And I do have a couple losses on this one today, for sure. I had one big one at the end, and a couple smaller ones sort of on the way. So we're beginning to form a 1-minute pullback. I don't know if I'm going to do a dip off of 7. Okay, there we go. Look at that. Look at that surge, right? I mean, that type of surge right back up. High volume, 51 million shares now. This thing is strong. So I added a little bit more at 49, taking a little off the table. I'm kind of like, boy, I wish I'd sized up. Now looking for the move to 8. 17,000 shares. Can we get that squeeze to 8? Over 788, 790. Watch there, sizing up. Looking for that same thing, that same breakthrough, the whole dollar. Watch right here. Sizing up there. Look at that. 87, taking, I actually put the order for the whole thing, but usually would take half off. So take some off there into that break over 8. Big bid, 67,000 share buyer. So we've got a big bid sitting there. Now I'm going to do a dip trade long on this. Watch this. So it's a little extended here, as you can see, this move up like that. Oops. So a little bit extended on that squeeze right there. So it could benefit from a little bit of a dip and then a curl. Bought the dip right there. Let's back that up for 1 second. So there's the big bid, which I like. It seems to be holding 8, so I'm looking for it to come back down so I can get in as close to 8 as possible. Stop then 801. Buying the dip right there, 809, 810. That's about as good as I'm going to get on this type of trade, just given how volatile it is. Stop is 8. Holding right now, giving it a second. Bids at 16. There's 18. Our high is in the 20s. And stopped out on that one. So on that one, I did lose on 18,000 shares, $2,000. So I think that was one of my first losses. Bigger drawdown here, as you can see, this dip. Dip trade at 68. Trying to catch a bounce near the $0.50. Putting some profit orders out at 83, 82. Cut the loss, break even, basically. Small loss. I think I might be early. Try again. Another little panic sell there. Watching. Starting to curl here on the 10-second chart. I think I missed the dip down there around 50. So if we back that up, you can see that it broke below the $0.50. It's going to flush, and that presented a dip opportunity, which I didn't take. Right here is the dip, that quick flush. Long, stop 10 cents. Stop is now 30. I should have done that, but I didn't. But after a loss and then a break-even trade, I'm kind of probably hesitating for a second. So I'm going to have to adjust my 1 minute chart. It's a little off the chart there. So we're curling back up. So now all of a sudden, just like that. Oops, let's back that up for a second. So this time I did the dip trade. So it comes back down. I'm looking at double bottom at 40. We got a double bottom here and a $0.50. So watch the flush. Boom, 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 boom. Right there. Stop is 35, 30, right around there. In at 55, 12,000 shares. Orders at 807. Double bottom. 55 is a good entry. There we go. Now back up to 36,000 shares. Breakthrough 8. Wow, look at that. Let's back that up for 1 second. Now, yes, the size is bigger because I have a larger account and I have a higher risk tolerance, but you could, in theory, trade this exact same setup with, 3,600 shares, and your gain would be 10% of what mine is. This certainly has the volume to accommodate small orders or big orders, so it's okay. Thanks, Mark. All right, so 74, 36,000 shares. Can we get that breakthrough 8? There's 8 on the ask. $12,000 right there. Taking half off the table. Okay, it dips down again. So we get that double bottom, that surge up, 50 cents. Now, where's the next order? Looking for this to break over 820, 815. Bought the dip right there. Starts to curl for the move back up over 8. In at 18,000 shares at 92. Back to break even. There we go. Good, good, good. Very good. Very good. Added at 818. Up to 30,000, 32,000. Cost basis 803. Back to break even, back to down. I could dip trade right here around 8, back over the whole dollar, but I'm already in with good size. So cut the loss there. That was again a bigger loss on that one. So 803 lost about 15 cents on 30,000 shares, so a $3,500 loss maybe. Now it's dipping down again. Could I get another dip trade off the $0.50? That'd be crazy, right? No, I'm doing it. Back in 12,000 shares, 750. Take that right off the table. From 50 up to 69.70, all the way to 80. Wow, this is really respecting that level. So let's see, VCNX. Let me get the 1 minute chart up on this, this one here. Okay, so this is, that right there is what I just bought. That dip trade right there. That's where we're at. So you know what's coming. We're going back up. Looks like, I don't want to give it away, but it looks like we're heading back up. Let's see what happens. So sometimes if I'm not refreshing my chart quickly enough, now I am, this chart that's on my screen share just doesn't happen to be the one that I'm using for my drawing. I had a different chart up, which was this one up here, I guess. So that's why this one isn't updating, and I just sort of neglected at a certain point to update it. Okay, so we're getting a little bit of a pullback here. Sitting up $67,000 on the day. Yes, we will look at that one as well. So that was a dip trade right there. So this is the bear trap. So the flat bottom was 640, right? I knew that was the flat bottom. It had tapped that level a couple of times. It was right here at 640. But sometimes they'll break that level and then they'll bounce right back up. So in this case, it's breaking 640. And then I'm seeing that bid there, 36,000 shares. I'm seeing some green, and I'm thinking, you know what? Let's try it. What's my stop? 10 cents. It either goes right away or it doesn't. 6,000 shares at 39. I take it off the table at 58. 1,200 bucks. It's not a home run, but that's a good dip trade. And then look at this, right back to 8. So now my new order is 8. Wow, that's a bear trap because all of a sudden you get that surge right back up. So anyone that shorted for that flat bottom break down, just there gets squeezed out. 20,000 shares long, 795, up to 34,000. Scaling up now, looking for that big trade. So let's see, how high does it go? Holding, looking for the break of 815, then 818, 820. There's 818, there's 825, there's 830, taking some off the table. It's the right move. Okay, 850. That's the new level I'm watching. Now it ends up popping up here. That was this candle right here on the 1 minute. So it dips down, it rips up to 40, and then it comes back down. So now we're going to come back down. And let's see if I get a dip trade on this pullback. You can see how it's pulling back right through here. So sold the rest of that as it came back down. Okay, so looks like a small little trade in this area. Oh, look at this. Okay. So what happened here is all of a sudden, it just, so this is right about here. All of a sudden, it just rips again. And it's like, it just happened so fast. I wasn't prepared for it. So I chased it. All of a sudden, I'm like, whoa, 39.40. We're going back to the high of day. So I just start shift one. I'm looking for the break of 850. Quick dip right there. In at 849. It's not a great entry, but all right, let's just see what this can do. And now I'm thinking, uh-oh. I kind of didn't wait for the pullback. I didn't really get a dip. I kind of just bought at the high. But now I'm thinking maybe a squeeze up to 9. So there's 856. Down. And I'm thinking on this one, I'm kind of like, all right, you're in a little high here with a big position. This could drop 30 cents and you're going to lose 10 grand. You might want to start unwinding this. Let's just see. A little micro pullback right here. There's 75. I'm taking some off the table at 58 and 60. Well, I'm in at 57. It's not even, 72 was one of the orders, but it's not really, I kind of missed that trade. And realistically, I probably should have just waited for a pullback. But sometimes they kind of just don't pull back. Okay, so watching here for another little dip, possible long, back that up. Orders at 880. It's dipping here, right around the $0.50. It's kind of straddling it. Can it get back above it? There, it's holding above it. Stop is now 49. It's got to hold. So I'm still holding, even though it passed the proper $0.50 stop. So there's 55, 56, 50, 47. It's struggling a little bit here. Only in with 8,600 shares. That's not too bad. Added a little bit more there. Trying to kind of accumulate on this dip for the curl. Then over 65, where the place where I would think a short seller would really start covering is where I'll start to add. It's also where I expect to see more buying volume. Here's green. There's that green buying volume. 68. 60, 70, 78, 80. So 16,000 shares from 54 is looking pretty good. Now 85, 90. Are we going to get that breakthrough 9? It's up 200%. I'm adding there up to 32,000 shares. Looking for that squeeze through 9. What's it going to do? It's struggling a little bit here. I'm into 66. Okay, there we go. There we go. There we go. Nice. Sized out 96. In this case, I actually remember in that moment saying, oh, shoot, I meant to hit sell half, not the whole thing. So, but, okay. So now I'm looking for an add over 9. Bought the dip there. That was a quick dip. Taps the whole dollar. Quick dip. Now rip. Look for the rip here through 9. 904. Well, not really. Okay. So kind of a little struggle there. Holding at 88. Adding more. So quick dip back there again. So I'm doing these little dips. Let's just back this up. So doing these little dips right around this level. So let's see, this was the squeeze there, 40,000 shares, out, no problem. 100 million shares of volume coming up right here. So added the dip right there. It dips down, do another add, 83. Look for the add back over 9. If it can break 910, then we're looking for that squeeze up to 925, 950. There we go. Ah, it struggles. So on this one, try to get out. I'm still holding it at 88. Okay, can it get over 9? It kind of technically broke 9. It was a false breakout. I have to be careful there. Added a little bit more. Now this is getting a little top heavy. I don't like that drop down to 75. I don't like that at all. That I don't like. That's really not good, but I've got a big cushion, so I decided to go ahead and add a little more. Sometimes this is where having a cushion can let you get a little sloppy. So it's got to hold 850. Cannot break 850. If it breaks 850, I'm going to lose like 10 grand on this. So here's 880, 84. I put some orders out, profit target. So if you recall yesterday, I showed you those profit target orders, 15 cents and 25 cents. So today I used them. And as I was doing it, I was like, I'm going to show the Warrior Pro students today how I'm using these hotkeys. So check this out. So I put the orders out 15, 20 cents up. It's for quarter position. So 4 of them is my full position. So I just kind of put them up there thinking, you know what? If this rips up real quick, maybe it'll pop me out. Here we go. There's 94.95. Am I going to get taken out? Now, yes, typically this is where I'd be adding, but in this case, I was in a deep position and I was not sure. So there we go. Hotkeys that were there early start popping me out. Now I've got 10,000 shares. Now I can be a little lighter on my feet. I could add into a flush, or I could add on the break of 9, and I'm not going crazy heavy. So here we go. And just for reference for anyone that missed it from yesterday. So in here I go to trading, and look now it's only up 83%. So, but 250 million shares of volume, very liquid. So custom orders, profit 15, profit, edge X, 15 cents below 15 cents above the ask, quarter position, profit 15, profit 25. You could set those for whatever you want. That just happens to be what I set them for, and then I map them to my keyboard. So I have those little, those quick profit hotkeys. So if I got in here, ZVZZT, long, and then I press that button, there's 1, and there's 2. So that's 15 cents, and the other's 25 cents. So I can put those hotkeys out, and just like that, if it rips up, it'll pop me out. You have to go minus because in this software, if you do plus, it does underneath the ask. So for my order that I have for selling underneath the ask with the offset, so sell quarter, offset -1. So this one, for instance, is 1 cent below the ask. I don't know. I would think that -1 would be below and +1 would be above, but they do it just a little differently. It's not super intuitive. So anyways, that kind of helped me on that one, because sometimes in the moment when a stock rips, it rips so fast that by the time you're pressing your order, it's already coming back down. And then you didn't get filled anything on that breakout. But then to take the time to manually go in here and type in, oh, what is it? You know, you fumble, and then you mess stuff up, and so it's so much easier to do it with a hotkey. All right, so looking for the break back over 9. So sizing back down on this a little bit, and you can see through most of this move, I'm actually keeping a kind of a core small position. So when I import my trades, it'll be interesting if it kind of looks at this as like one long trade, because I kept a position open. But anyways, so we're back up at 9. I bought the dip there again. Same kind of thing. Bought the dip there in the 80s for the break back over 9. Can we get that break over 9? There we go. Nice. That's a firm break through the $0.50 or the whole dollar. Taking half off the table, a little bit more. So now we're looking kind of like this on the 1-minute chart. That was the little pullback and then the rip higher. A little choppy on the 1 minute, you know, if we kind of are honest, but so strong, high volume, crazy high relative volume, just super, super strong. Now 9.10, if it can get over that level, could be the next trade. So it continues going higher. It dips down for a second, and then right up here, let's see, where is it? Okay, so right here I'm holding 20,000 shares at 9. I'm buying the dip. This one is another one of those situations I think where I'm in a little, not positioned very well. Looks like I get out for a small loss. I get back in. I'm trying to catch that squeeze. So right here we're at 950, 6,000 shares. And we're about to get a big flush. And I don't see it coming. I really don't. We get a little dip. I buy that dip there, 14,000 shares. I'm looking for the breakthrough 950. I don't see it coming right here. I don't. I'm about to get slapped in the face and I don't see it coming. There's 34. This is all typical. This is typical to what we've seen on this one today. Right here is normal. Now on the 10-second chart, squeezed up, micro pullback here. I bought the dip. Nothing unusual. It is struggling to break the $0.50, but it's done that on other occasions at $0.50 and whole dollars. I put out an order for profit target. So now we're back down towards 9. Okay, well, you know, a little bit of a dip. I could add, whoa, what just happened? Look at that, 12,000 in the red. What just happened? So this is where a little panic sets in, because all of a sudden, it just cracks that whole dollar. And in basically one order, drops to 890. And now, you know, me and anyone else that's in this high is like, uh-oh, 880. Now the panic. Now people are selling. 880, 870, 867, 834. Oh, no. Now the whole level down is 721. And look at me, I hit the bid at the bottom, 28. It bounces. Right off my exit, it bounces. Not a lot, but and I try to do a dip trade on it, and I get a little something on it, $900, but it doesn't change the fact that I went from up 100,000 on the day to up 84,000. So I lost 20 grand on that trade, and I really didn't see it coming. You know, sometimes you just get that flush, and that's part of trading. The good news is that that doesn't seem to be, that certainly doesn't happen so often that it wipes out all of the winning trades. Now I had made the decision at this point to reduce my share size to a max of 25,000 shares from 50,000, because I said, you know what, you're up 100 grand or whatever. I might have done it when I was up 80, but I said, you know what, I'd like to close today green. Let's try not to overstay and trade. Let's size down. Let's reduce risk. So I started reducing risk, but still 20,000 shares is big size, 25,000. This was a little extended on the 1 minute chart up here. This was where it happened. You know, and I don't know. That was just the turning point on this one. So I could have cut the loss sooner on it, but I wanted to give it a second to see if it would pop right back up. I don't usually like to panic exit, but then when it dropped, you know, right there, I was like, okay, that's not great, but let's just give it a second. And then right in here, I was like, oh my God, I tried to put out the sell order at 52 and it didn't fill. I'm at 41 by 45. And now I'm worried about a halt going down. So right before the exit there, let's see. So down 21,000. You know, so I mean, it's unfortunate to have that happen. You know, and definitely trading stocks that are up this high is risky. If we look at the 5 minute chart at that time, it was also fairly extended. That ended up being the high of day and it rolled over. But I was worried possibly that there was some news of like a secondary offering or something. There wasn't. It was an extended 5 minute setup, and I probably just should have reduced my size a little. But on the other hand, we've seen stocks like this that keep going higher. So at this point, you know, giving back 20,000 is not the end of the world. So sat at 84,000, which is where I'm still sitting right now. So didn't take any more trades. ZVZCT doesn't count. And yeah, so, but in any case, this was one where this is the type of stuff that we'll talk about quite a lot in chapter, I believe, 11, because this is the high speed trading. This is being really aggressive. And this isn't how you have to trade. You could certainly trade these. You could certainly trade slower. You certainly don't have to even do dip trades. There's a lot of different ways to trade a stock like this that goes from $6 to $9. I think it's the right stock to be trading because of obviously how much it's moving. And if perhaps you felt more comfortable with setups that are a little cleaner, a little clearer, I think that that's fine. This is one that had some nice clean pullbacks pre-market here and here. And then by the time we were getting near the open, it was just extended and kind of kept surging before finally rolling over. So Anyways, so that's the live trades from today, which was fun. And that is going to be the end of Chapter 8, Setup 8. And you guys watching in the Learning Management software, congratulations. You made it through probably the longest chapter, but it is a complex one. It's definitely an interesting one. I hope you've enjoyed it. And you can continue on to Chapter 8, Setup 9.